is a subdued M&A environment, is having an impact as well on valuations. But private markets, the beauty of the private markets is that you have time to walk through all of that. You don't need to enter at the peak of a valuation, for example, and then have pressure to exit. You have the time to actually work, have a positive impact and add value to your portfolio companies. You are able to create growth, improve the situation and the competitive advantages.
Is time starting to run out? And I know that's kind of trashy to say, but this idea that it's been a slow market, LPs, investors, they want their money back, they want exits. Is it starting to become crunch time for that?
It's true, there has been a significant pressure on liquidity in the market, particularly for the LPs, so there is pressure on the GPs to offer that. Given where we are today in terms of a little bit more certainty when it comes to inflation, inflation went up a lot last year, but it has come down as well. There is a little bit more visibility in terms of, or expectations of people in terms of where interest rates are going. And with that kind of certainty in the backdrop in macroeconomic conditions will enable us to have a little bit of an overview in terms of where valuations are going, and people will be able to factor that in the valuation. So yes, I think there is a little bit more clarity in terms of what companies are valued at.
I guess there is that uncertainty, though, of geopolitics and what that means for inflation. Every day we hear and see a new headline about issues in the Red Sea, another Houthi attack, another US-UK strike. We did see some UK retailers, Next, Marks & Spencer, Tesco, all of them said that, look, customers might need to start paying more because of this issue with shipping routes. Are you seeing that in your portfolio companies at all?
We are in a situation which is extremely fragile, and I was just referring with a little bit more certainty in terms of the direction that inflation and interest rates are going, but that is very fragile. Any of the shocks that you are mentioning, for example, what's happening in the Red Sea, is going to have an impact again on supply chains, will probably have an impact on inflation up again. So we need to be very careful because this is definitely, we are not out of the woods. Our portfolio companies have learned to be resilient, have learned to be flexible, and have learned to adapt to the difficult situations. And so, when we work with the companies, we try to make sure that they have that flexibility and adaptability, which is critical in today's market conditions.
So what does that look like? Is that the onshoring, friendshore kind of model?
Yes, that's part of it, but that is, again, inflationary if you think about it.
Right.
There are a lot of, that's why I'm saying that the situation is fragile at the moment, because a lot of the trends are very inflationary, which puts pressure on the fragility of the system right now. So onshoring, reshoring, demographics as well is inflationary. Energy transition is inflationary. And so you have to be really careful when you plan sort of the management of your assets. Short-term, mid-term, and long-term.
It's a lot to think about. And just to add another one to the mix, Carmen, is the uncertainty of an election. More than half the world's population goes to an election. One of your main markets, the UK, is likely going to have an election this year. What happens to deal flow? What are you expecting for deal flow in an election year? Does it change? Does it alter things?
I mean, it's fair to say that the uncertainty and unpredictability of elections will have pressure on deal flow and activity in any given market. When there is no uncertainty, investors tend to be significantly more subdued when putting capital at risk. So that will have an impact. The UK is in a slightly unique situation where, we just managed at the end of 2023 to come out at around 1% in growth. So we managed to avoid the recession. But on the other hand, we have inflation down to around 5%. So it sounds like we are in a better position than we entered 2022. But the situation that it has is been underinvested for many years. There are demographic pressures as well, skill set, a lot of industrial actions, and then on top of that, an election. We don't know when that election will take place, what time during 2024 or the beginning of 2025. Until we have an election, we are going to maintain that uncertainty and what is going to be the policy going forward in terms of investment and all of that. And therefore, will have an impact on our markets.
Right. I mean, what difference does it make if Labour wins the next election? Is that good, bad for business?
Difficult to say, because there are so many measures that need to be taken, for example, public investment, taxes, all these different sort of parts of the policy making that one will need to understand much better ultimately what the decisions are. But this is an opportunity for business, right? For us, we have UK represents a strategic market where it's our second largest office. When there is uncertainty, there is opportunities. A lot of people are on the sidelines, so we are there on the ground with 75 people looking to deploy capital and find interesting and attractive opportunities to invest.
I mean, one of the other sort of regulatory government policy things that tends to come up, and this came up in Davos again and again. It won't surprise you who it came from, that private capital needs more regulation. It was, of course, the bank CEO saying that. It's, you know, the classic Jamie Dimon, private credit's dancing in the street with more regulation in banks. Do you think there's any truth in that? Does there need to be more regulation for the industry?
There is a lot of talk about regulation in the industry, and it depends who you talk to, as you absolutely said. The reality is that, you know, the best regulation is to be self-regulated. Private markets are effective. They are growing. They are financing the real economy. They are actually the go-to capital for many mid-market companies, whether it's private equity or private credit. And last but not least is financing some of the mega trends that we are seeing that need massive amounts of investment. For example, the energy transition or regenerative agriculture. So we are a sort of critical component at the moment of our economies. So whether you need regulation or not, what you need is the growth and the private markets to be present and cooperating with public money in order to drive some of these mega trends forward.
Right, and so you mentioned some of them, but I can't help but wonder, in 2024, what sector do you think is the real winner in the UK, in the Iberian Peninsula?
Well, we are very much thematic investors, and I've mentioned several times energy transition, climate change. Cybersecurity is another one that is critical, considering sort of the era and the technological developments that we are having. It's also an opportunity, but very much of a threat. So cybersecurity is one of the sectors that we are very much focused on. I mentioned regenerative agriculture, aerospace and defense as well. There are, as you mentioned before, geopolitical tensions, so having strong aerospace and defense sectors in our markets are absolutely critical as well. And we are there supporting companies with capital to make them stronger.
Carmen, that's an excellent place to leave it. We're going to have to leave it there. Carmen, thank you so much for joining. Francine, that was Carmen Alonso, TKO Capital's head of UK and Iberia.
That was a great conversation, Danny. Thank you so much. Danny, of course, is at EPAM, the Private Equity Conference in Cannes. Now, we'll have plenty more, of course, from Cannes looking at private equity. Also, there's a little bit of breaking news across the Bloomberg terminal just minutes ago. This is from TASS, the news agency in Russia, has said that a plane carrying 65 Ukrainian prisoners has crashed. Now, this is according to the Defense Ministry spokesperson. We understand that there are 65 Ukrainian military prisoners on board, as well as 9 crew and guards that crashed in the Belgorod region near the border with Ukraine. Now, this is an Il-76 aircraft, and we understand that it came down again while transporting the prisoners for an exchange with Ukraine. That's according to the latest spokesperson of the Defense Ministry in Moscow. Now, there was no immediate indication of what actually caused the crash. We'll keep an eye on that. We'll also look, of course, at some of the economic news out there. We had some Eurozone PMIs earlier this hour. Now we have the UK January services PMI rising to 53.8. The forecast was 53.2. Again, quite a similar pattern, but also manufacturing was a touch better than expected. Nothing huge, and both numbers are below 50, which still indicates a contraction. Coming up, more from our conversation with the chief executive of ASML. That's as shares of Europe's most valuable tech company jumped today after it posted a massive beat on fourth quarter bookings. That's next, and this is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We
have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
SAP shares, one of the biggest gainers on the Stock 600 today, as Europe's biggest software company posted fourth quarter earnings beating analyst estimates. Now, the chief executive, Christian Klein, spoke to us about the company's investment in AI and growth prospects.
We are very confident about the growth potential of SAP until 2025 and the years beyond. And so SAP will also further invest. So we actually expect that at the end of the year, we actually end up with the same headcount as we left 2023. And for the years to come, there will be investments, there will be headcount growth, but of course, under proportional to our top line growth.
Well, the SAP chief executive, Christian Klein, speaking to us a little bit earlier today. Now, another stock gaining, ASML, Europe's most valuable tech company, jumping as fourth quarter orders more than tripled last quarter. Now, it's being seen as a sign that the semiconductor industry is actually resurgent. Now, for more, let's bring Bloomberg's Tom McKenzie, who spoke to the ASML chief executive officer earlier. Tom, it was such an interesting conversation. So what has the CEO been saying about his outlook?
Yeah, Francine, I'm on the ground at the headquarters, the global headquarters for ASML. As you correctly said, the most valuable tech company in Europe, and have been speaking, as you also said, to Peter Wenning, the CEO of ASML. On these blowout numbers for the fourth quarter in terms of the sales, 9.2 billion euros, triple the previous quarter. And a lot of that growth coming from their clients, their major clients, including TSMC and Intel and Samsung, for these extreme ultraviolet lithography machines. The demand is there, it's been holding up. And the key question, as you say, for this CEO was whether or not he now sees a bottoming in this semiconductor market. Take a listen to what he had to say to me.
We see the first positive signs of recovery. So at the beginning of the year, we'd much rather be a bit conservative. But as you also saw, had a record quarterly order intake, which also bodes well for 2025 and perhaps the back half of 2024.
So to be clear, this semiconductor market has now bottomed.
That's what we believe. We see the positive signs.
And Francine, despite the fact that they had this record sales data, order numbers out for the fourth quarter, they actually have a pretty conservative outlook for 2024. And Peter Wenning telling me, the CEO, that the reason for that is a lot of their clients are going to be absorbing some of these orders through 2024. He said 2023 was a top year, 30% growth. He doesn't expect to see that level of growth for 2024, precisely because they take down some of those inventories. But he does see 2025 as a really significant year. And again, these extreme ultraviolet lithography machines, they make possible these most sophisticated chips that go into everything, of course, from our iPhones to the data centers that power the growth around artificial intelligence.
So, Tom, is ASML now at risk of losing the China market?
And that is the key question, Francine, absolutely the key question, because what we've seen in the last few years are ramped up restrictions, of course, on the type of equipment that companies like ASML can provide to the Chinese market. And it's worth noting that ASML has a complete monopoly on extreme ultraviolet lithography, so the most cutting-edge machines that can produce the most cutting-edge chips. No one else is able to do that. They have been restricted from supplying those machines and the generation prior to that, deep ultraviolet machines, into the Chinese market. When I spoke, Joe, to the CEO, he said, look, 90% of the market actually for them in China is the mature part of the business. He's not too concerned, but in the fourth quarter, you did actually see sales coming down in terms of sales to China. China was very important in terms of a market for ASML in 2023. But his message to lawmakers in Washington and indeed The Hague here in the Netherlands is, look, this is a finely tuned semiconductor ecosystem. If you put further restrictions in place, there is going to be a cost to pay. But clearly, he acknowledged national security is a legitimate concern, and clearly that's where the focus is for many lawmakers sitting in Washington. I also asked him, of course, about generative AI and what his clients are telling him, and he says that demand is very much there. The demand for compute that underpins so many of these AI models, whether it's Bard or DeepMind or OpenAI, the demand is there, and he says that is going to be a structural upside for ASML in the years ahead, Francine.
Tom, thank you so much. Bloomberg's Tom McKenzie there in the Netherlands with a wonderful recap of ASML. Now, on to transportation. Alaska Air says it has found loose bolts on many of its Boeing 737 MAX 9 aircraft following inspections after the mid-air blowout earlier this month. And Boeing says it is deeply sorry for the significant disruption to airline customers. Meanwhile, United Airlines is no longer counting on Boeing's largest 737 MAX model as manufacturing lapses threaten further delay. Well, let's bring in Bloomberg's Sid Phillip, who, of course, is one of our star reporters when it comes to aviation and transportation. I can't really get my head around about how many bad news we have on Boeing. Now, this also the fact that Alaska Air chief executive came on venting his frustration after Bloomberg wrote this story. So it was a Bloomberg scoop originally on Monday. Just if your customers turn against you, this is not great.
Yeah, it's terrible for Boeing because your biggest customers, especially United Airlines and Alaska Airlines, who are the biggest operators of the MAX 9, and also they have other Boeing models and Boeing 737 models on order, are sort of losing faith in Boeing. And so that is really the most significant sort of bad news for Boeing as they sort of try and get past this hump that they've had. I mean, the MAX 9's been grounded for 3 weeks now, and airlines are desperate to get the aircraft back into service. And so for Boeing, it's really sort of difficult to get sort of your biggest customers who are sort of now publicly commenting about how frustrated and angry they are.
Yeah, and 1 month you can see actually Boeing down 19%. How does Boeing turn this round?
It is really difficult for Boeing. I mean, I think airline CEOs as well as analysts have talked about how Boeing really needs to work on getting their quality up to scratch and make sure that they can basically produce quality aircraft. And that's really the key question for them. How do they go about sort of revamping their manufacturing process in order for customers to be reassured that their planes are basically quality and they make sure that the planes are safe and safe to fly?
Thank you so much, Sid Phillip, of course, for the very latest on Boeing, some of the ups and travails. Now, we did have some eco news earlier this hour. The pound actually already on the move higher before the UK PMI numbers hit. At the moment, they're relatively solid. Readings only bolstered that momentum. So look out for pound. Now, the other breaking news story that we're also mentioning, it's what's happening in Russia, saying that a defense ministry plane carrying 65 Ukrainian military prisoners as well as 9 crew and guards have crashed in the Belgorod region near the border with Ukraine. Now, this is an Il-76 aircraft. We understand that it came down while transporting the prisoners for an exchange with Ukraine. This is according to the Russian Defense Ministry. They announced that on Telegram, but there was no indication of what caused the crash. Coming up, Netflix has posted its best subscriber growth since the pandemic. We'll dive deeper into the streaming giant's fourth quarter earnings next, and this is Bloomberg.
probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
This is Bloomberg.
Well, Netflix shares jump in pre-market trading after the streaming service added more than 13 million customers in the last 3 months of 2023. It's the best quarter since early on in the pandemic. Now let's bring in Bloomberg's Alex Webb. Alex, 13 million, this is a lot. Is it because the content is so good, or is there a trend that we could look at?
Yeah, there are a few different factors at play here. As you say, it is a big number. The market was looking for 8 million additions, so it's more than 50% beat on that. The two main things really seem to be, yes, content, as you say. They have had a few hit shows, Leave the World Behind, the David Beckham documentary among them, but they've also really managed to make headway on the efforts to stop password sharing, which forces people in different geographic locations who might be using the same password essentially to sign up for their own accounts. Around the edges as well, they are starting to make headway with their advertising supported model. They've got about 23 million advertising supported users at the moment, which is about 10% of the little less than 10% of the total. So all those three things are what's really driving the change.
We also, of course, heard that Netflix is now buying live events. Is this a change in business model? How surprising is this?
Yeah, they've sort of been trying out a few things in this space with greater or lesser success. They have now agreed a deal to get the rights for Raw, World Wrestling Entertainment property, for the next decade, as well as some other WWE events globally. It's interesting, it is a live event rather than sport per se, because a lot of what they do is ultimately scripted. It's a meaningful amount of money, and ultimately, they're trying to drive engagement, which live sports and live events can do in a way that particularly when it comes to their advertising business model, that are incredibly appealing for some audiences.
Alex, what can you tell us about Tesla? So I know some of the Chinese manufacturers are really doing really well, and then we understand that Tesla may be looking at starting a production of a new car in 2025.
Yeah, there are a few different things happening. So the market is becoming increasingly saturated, partly the Chinese players, not least BYD, which has overtaken Tesla now as the world's biggest maker of electric vehicles. But we're seeing a lot of automotive incumbents really start to make headway in the space, companies like Volkswagen and so on. The prospect of them introducing new models reported by Reuters. It looks like it could be a crossover compact car. That's what Reuters is reporting. The market has been looking for a new model lineup, which they've not refreshed for some time. When it comes to the earnings a little bit later, the main focus is on what the guidance is going to look like for this year. They delivered 1.8 million vehicles last year. The market's looking for about 2.1 this year. So any steer around that will be keenly watched by market observers.
All right, Alex, thanks so much. As always, Alex Webb there with the very latest on Netflix and Tesla. Up next, Bloomberg Brief, Managed Cranny in New York. Danny Berger is in Cannes. So you'll have a full round of also some of the private equity news that we're seeing in EPAM. This is Bloomberg.
continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and your work. I know I deal with that all the time. This is really a people-first company. And even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that, this is something that, many business leaders are focused on, and, time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at a 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been and will continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Good morning from our world headquarters in New York. I'm Manus Cranny. Danny Berger on tour in Cannes, speaking to the private equity leaders. Welcome to Bloomberg Brief. Let's set your agenda. Donald Trump wins the New Hampshire primary, putting him on course to win the Republican Party's nomination for president.
This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night. She had a very bad night.
China will cut the reserve requirement ratio for banks in early February, the bid to boost growth and markets. In tech, Netflix surges subscriber gains. ASML signals a revival in the semiconductor industry. From semiconductors to the financing of the engines of the world, she's taken to Cannes. She's in front of the boats. Danny Berger is on tour. But you're printing headlines. The big boys and girls of private equity are turning up and delivering capital. Danny, good morning.
Yeah. Good morning, Manus. I honestly, every time I look at myself in the return in the camera, I'm so close to being like, maybe I should just turn around and get on one of these yachts. There's one behind me called Lucky Us. I feel like that's ours. I feel like we should be on that. But you're right, Manus. I mean, I've had a couple interviews here so far, and it seems to be that the size of deals can keep getting bigger. I was speaking with Premier's David Hirschman, who said we could see a double-digit deal possible for private credit. That's never been done. And, of course, in this beautiful background as well. The other theme here, Manus, is that banks are back. Before this market, this industry was getting more market share from banks. They're coming back. They're doing more loans. They're eating into private credit's world.
Yeah, no, they're just eating in, and therefore they'll be stacking up with the human capital to close those deals. I think the other thing, we were chatting this morning, and you said, look, another narrative is that those companies that are waiting to refinance and waiting for the Fed to cut, this is going to create opportunities for the community that you're talking to there right now. And also, it's a bit of a risk with this.
Yeah, because the idea is how long can you really extend and pretend, to use one of your favorite phrases, Manus, that a lot of us thought we'd get rate cuts in the first quarter. It seems less likely considering all the pushback we've gotten. And of course, we'll find out more about that in the days and weeks to come. So potentially, if you can't just wait to refinance, do you need to fire sale? Do you need to sell assets on the cheap? For those who don't have to do that, it's maybe a good moment. And Manus, we're going to have more of those conversations throughout the hour. We're going to be speaking with Ardian's head of expansion, Francois Jurignon, and Ardian, of course, is $160 billion. We'll also be speaking to the co-CEO of Eurazeo, that is Christophe Bavier, who has about $37 billion under management, Manus.
Well, therefore, we'll take advisement from those boys in terms of the themes. Danny, have a great day. I'm envious the backdrop that you have. It's freezing here in New York, but you'll know more about that next week. Let's talk about these markets. It's a heady mix of politics and policy. Policy from the Chinese in terms of getting ready to cut the triple R, the reserve requirement, injecting liquidity into the system, $139 billion. That pops the Hang Seng up by 3.5%. Schroders are saying, look, this could actually give you a better opportunity to get out of your China exposure. SPUs are up by 0.5%. Donald Trump, it looks as if he's cruising through. He takes New Hampshire. You're seeing Netflix on fire, adding more customers, more price rises. Will they come? There is Netflix in the pre-market up 9.82%, building on yesterday afternoon's momentum. Do not get vertigo. That is the message from UBS. Stay invested at these highs. Again, making a second day of record highs on the U.S. equity markets. To the rest of the markets, this is what we've got on that stimulus policy from China. You're also seeing a narrative pump up the volume on iron ore. The bid there to stimulate the Chinese economy, even though inventories are piling up. Singapore iron ore up by 2.25%. Yields give back a couple of ticks this morning. You are just seeing the dollar heading for its biggest drop of 2024. As yields just tick down ever so slightly, are the yield hunters returning to the bond market? That is the mood in the market. Let's talk about the stimulus, the quality of it, the size of it. Justina Lee is with me for Bloomberg. So Justina, in terms of this effort today, yesterday was about a sticky plaster on sentiment. Today is about growth.
Right, exactly. And it's pretty unusual even for Chinese policymakers, for the central bank government to actually come out there and pre-announce this reserve requirement ratio cut, which would be 0.5 percentage point. And they're forecasting that to release about $1 trillion into the economy. And I think that just kind of goes on to show how kind of worried Chinese officials are at this point about the sentiment in the market. And it's kind of interesting that we saw a bit of a mixed reaction. We did get a bit of a bounce in stocks, but not as much of a reaction in terms of like the currency or bonds. And I think part of that just shows how nervous investors are at the moment.
You talked about the rebound in stocks, Justina, but is this enough? Because there's still a lot of disagreement whether you jump in now, they've sold off enough, or if it's just catching a falling knife.
Yeah, and I think there are a lot of people out there warning investors that, yes, those valuations look low, but don't be tempted. And I think that's because, like, you know, there have been many times over the past year when people have said this is the bottom, and it was never the bottom. And I think that really underscores kind of the difference in magnitude of the economic challenges that China is facing right now in terms of, you know, the downturn in the property market, maybe the sense that you can't really just pump stimulus into the economy anymore. So I think what investors are probably kind of thinking right now that is you do need more, and you do need kind of more kind of consistent guidance from the government, and more in the way of, you know, maybe a change in economic policy or even more stimulus.
Yeah, well, it depends which piece of research you read. If you look at Schroders, Rémi Poutin says, tactical lift, it makes the country's assets a structural climb, but that could be the incentive to reduce your exposure further. So take your opportunity. Okay, Justina, thank you very much on the stimulus. Danny's having a languid time in Cannes. I'm here freezing. Let's talk about Netflix. Streaming service. It's reported its quarterly numbers, the biggest customer gain since the start of the pandemic.
We're really thrilled with our engagement trends domestically and globally. Our engagement is a bit impacted by our paid sharing. Think about it like fewer households using the same account. So as those folks spin off and get their own accounts and we win them over with our programming, that will normalize and continue to grow.
Well, it's all hail. Netflix looks like the stock's at a 2-year high. Alex Webb is with us. So these numbers, the ads, where were the biggest gains? Because it was beyond borders, so to speak, outside of the United States of America.
Yes, they beat expectations in almost every region, adding more than 5 million customers in Europe alone. The expectation had been for globally the increase to be about 8 million customers. In the end, it was 13 million, more than a 50% beat. It seems as though the reason behind that, as the company itself pointed out, partly, of course, this password sharing crackdown, which makes it a little bit harder for people with considerably different IP addresses to share passwords over an extended period. That's made a difference. We've also got around the edges the push into advertising, where they've now got about 23 million subscribers on the advertising supported tiers, a bit less than 10% of the total, but it's still there driving some of the gains. And finally, of course, never underestimate the content. They have had a few big hit shows, things like Leave the World Behind and of course the David Beckham documentary. All of those things are contributing to this significant beat.
Yeah, I still need to see that one. That's on my to watch list when I fly back. But Alex, we also got earnings from ASML, and that was a huge quarter too. Earnings more than tripled. Bloomberg spoke to the CEO. Take a listen to what they had to say.
We see the first positive signs of recovery. So at the beginning of the year, we'd much rather be a bit conservative. But as you also saw, had a record quarterly order intake, which also bodes well for 2025 and perhaps the back half of 2024.
So to be clear, this semiconductor market has now bottomed.
That's what we believe. We see the positive signs.
ASML has strong earnings. TSMC, Alex, not that long ago, also posted strong earnings. Is the chip industry back? Is recovery in?
Well, it certainly increasingly looks that way. If ASML thinks so, and they are very much the leading bellwether for this stuff. If people think that there's going to be demand, they order more of ASML's machines, and then we start to see the output appear in maybe a year, 18 months, or a little bit further time frame. So it's good news for the chip industry that ASML sees demand starting to tick up, and of course the scale of the beat was again quite considerable. The market was looking for orders in the order of 15 billion euros. The actual number was closer to, was in excess of 20 billion euros. So it's all heading in the right direction. You never know with the chip industry where there might be a few bumps in the road along the way. All it takes is a few geopolitical problems, some supply chain bumps, and things get thrown out again. It is very much a sort of concertina effect you see in the chip industry. If oversupply or undersupply then leads to oversupply as people bring more capacity online. As there's oversupply, then there's a retrenchment. So it seems as though we're back into the upcycle. We'll have to see how long that lasts.
Yeah, depends, of course, where the geopolitics plays out as well. And China front-loading their orders at this stage. Maybe they're getting ready for something a little bit different in America. Bloomberg's Alex Webb on the tech narrative. Let's take you through the other stories that are trending on the Bloomberg terminal this morning. Donald Trump beats Nikki Haley to win the New Hampshire primary. Increasing chances of a rematch with Joe Biden. Haley vows to fight on. But the loss raises the questions about how long can she stay in the race. A Russian military plane with 74 people on board crashed near the Ukraine border. It's carrying 65 Ukrainian prisoners of war. It wasn't immediately clear what caused the crash. The aircraft came down while transporting the prisoners for an exchange. Alaska's CEO told NBC that the carrier found loose bolts on, quote, many of its Boeing 737 MAX 9 aircraft. That's after the mid-air blowout on one of its planes earlier this month. The FAA says it may expand its Boeing probe beyond the MAX 9. Bill Ackman and his wife have bought a 5% stake in the Tel Aviv bourse. This marks one of the highest profile investments in Israel since its war with Hamas erupted. Coming up on the show, another victory for Trump as he inches closer to the GOP nomination. We go live on the ground to New Hampshire. Up next, we're back in Cannes with Danny, an interview with a private equity dealmaker. There you go. Coming up on Bloomberg.
go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
This is Bloomberg Brief. I'm Danny Berger in a very beautiful Cannes, making Manus Cranny jealous, who is in a very cold New York. Welcome to the program. I'm here in Cannes at the IPEM Private Capital Conversation. I'm very pleased to say that joining me now is someone who comes from a titan of this industry. It is, of course, Francois Jeffignon. He is the head of expansion and a member of the executive committee at Ardian. Francois, thank you so much for joining.
My pleasure.
Not a bad backdrop to be having this conversation. But now I need to get into the grim. Here's the fun fact I have for you that's not so fact. So it's the first time in 10 years that Dealmaking in 2023 missed the $3 trillion mark. It was the lowest value of deals since 2013. That does feel a bit bleak. Is this year a year of normalization, or is it another slog?
Well, when we look over 2023, indeed, there was a decrease of M&A activity, and that's because I think many people, the main theme was going on to flight to quality. So many investors chasing assets that were both resilient and growing. I think this year the theme is going to be more or less about the same. Still, I expect that the gap between what buyers and sellers are expecting on each side for assets that are maybe less resilient or less growing, I think that should narrow, and that should help probably towards the second half of the year, so that M&A activity should pick up. So I think it's a positive trend this year.
What narrows that gap? What is everyone waiting for?
I think there will be pressure ultimately from LPs. One of the main themes this year is that they are looking for cash. So I think many GPs have postponed these exits, but I think at a certain time, especially given the challenge of fundraising for some of them, they will have to sell their assets. So I think that's going to make the M&A activity pick up.
Until then, how hard is it today, right here, right now, to exit an asset and get the price you want?
I think there are two ways to look at it. It's like the sky. There are clouds, but there is always the sun behind it.
Poetic.
So I think what's important is to have made investments in the right way. At Ardian, we always want to invest in mission-critical companies. Why? Because in the case of a downturn, clients will still buy, and in the context of inflation, which was a big topic over the last 2 years, companies are able to pass on price increases. If you have these two characteristics, the market is still intact and there are buyers. We made exits last year. We are still going to make them this year. We have a lot of these portfolio companies, so we are optimistic.
I want to ask about a specific asset, and to be perfectly candid, it's top of mind for me today because I flew here from Heathrow. I know you took the train from Paris, but of course Ardian has agreed to buy 15% of Heathrow, possibly looking at more. It's an interesting asset. How do you grow an asset like Heathrow Airport?
Well, first there is a trend behind the traffic, and I think on top of that, there are ways to optimize, especially on data, for instance, which is a big topic. So airports have many data that they can use, obviously in the right way. So on this asset, as you know, we have made an offer in November to Ferrovial. And as Ferrovial is listed, I am not in a position, as you would expect, to comment it further.
It does seem, though, that people are willing to sell some of their positions. I mean, I do wonder if you're concerned about the valuation of the asset, because some have said, oh, you've paid too much for it.
So price is always an important topic, but is it the only one or is it the main one? We think that it is not. Obviously, you have to be disciplined, but the main point is to understand whether the company that you're looking at is, first, with a very differentiated business model, second, strong quality of management, and the last point is the potential for growth. Even if you pay a little high at the beginning, but there is so much growth, more than double digits, very soon the valuation will decrease, and therefore you still make good returns.
Well, Francois, I'm going back to Heathrow later today when I fly back, so I'll give you some notes about where I think you can grow and what can be done.
Glad to hear that, yeah.
Look, Francois, I have to ask about this because the FT at the end of last year had a really biting article that Ardian isn't prepared for succession. Do you get a lot of questions about that from investors? I'm sure you don't want to, but has it been overshadowing your work since that came out?
We're always happy to take questions. So let me answer it. First, Dominique Sénéquier, our founder, she has been the driving force of Ardian. She's the soul of this company. She launched it in 1996. People like me, we owe so much to her. We are grateful for all the help that she's bringing to the company, the energy. So today, she's founder and CEO. There is no succession. When it comes to governance, which is a different topic, a new COMEX has been put into place, a new general management team has been nominated, and I think it's quite similar to what we see in other successful companies. So I think we are ready for the next...
You're not worried about a succession plan or anything
we are
like
not.
That? It's also a difficult environment for fundraising, but I know Abu Dhabi participated in one of your more recent funds, $6 billion. How critical is money coming from the Gulf right now?
We have always wanted at Ardian to be very, very diversified in terms of profile of investors, and that's true from a geographic point of view. So the good point is that you're not dependent on cycles, and that's what we don't want to be in. So that's a good way today to have very loyal customers. Of course, the Gulf is on a top priority these days, but that's part of the relationship that we have on long term with all our investors.
Okay, Francois, we're going to have to end it there. Thank you so much for joining. It was wonderful to speak with you. I'll let you go off and enjoy, the sun behind the clouds, as you put it. Francois, thank you so much. That's Francois Jeffignon, Head of Expansion at Ardian. And the conversations continue later in the program. I'll be speaking to the co-CEO of Eurazeo. Stay with us here on Bloomberg Brief.
Tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware. And that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S. and it's a safe bet that some of them will eventually find their way to the C-suite.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rating
World Cup. This is a three
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
You later got asked to be the head of USAID.
I got that job when I was 36 years old.
36 years old, you're running USAID. How many employees does it have?
We had 11,000.
And did you feel qualified to run something that big?
I did until, the work started.
When will the ECB decide to cut rates?
We are on the right path, but I'm not going to shout victory.
Bloomberg Television brings you the breaking news and detailed analysis after ECB President Christine Lagarde's press conference.
The wages issue is what I think the ECB is really focused on.
June is our base case.
There is still a 50-50 chance of a rate cut coming just slightly before that.
In many ways, they should have been cutting already earlier to stimulate growth.
The ECB decides. Thursday on Bloomberg Television.
It's Bloomberg Brief. I'm Menace Crenny in New York. Denny Berger is on special assignment in Cannes, chasing the investors of private equity in terms of valuations. But we've got a few other stories to run through, Danny. And of course, this is going to present opportunities as well in the world where you are. Tech is really going through some big adjustments. SAP up the most in 3 years. This is the biggest software company, cutting 8,000 jobs. But again, it's about that pivot towards AI.
Right, and I find this really interesting because it's another story yet again where AI is being associated with job losses. I was actually talking to someone here from InvestCorp who said that they can use AI to do modeling now. They don't need those entry-level jobs of people doing that. Manus, they're coming for my spreadsheets. I'm not going to have to build an Excel model in the morning. I don't know what I'll do with myself.
But it's about this inflection point between, are you cutting jobs to cut costs and deliver operational margins? They reckon that it's going to cost them about $1 billion over the next 2 years, but then it's about expanding, it's about reinvesting, and they don't expect to reduce the total workforce. So it's about a rebalancing act, really, isn't it?
Yeah, it certainly is, and that's something investors want to hear. They also want margins to come in. I mean, at least for tech, margins are already much thinner than much of the industry. But of course, Manus, we also learned of other tech job cuts coming from eBay as well.
Yes, so when you pivot to the eBay, just look at the sort of 60 big tech companies in the world. They've cut about 11,000 jobs, a lot of them on the West Coast. So again, tech leading the way. It did last year, Danny, in terms of the job cuts. eBay is going to cut 1,000 jobs, 9% of its full-time workforce. And of course, it did 4% of its workforce last February. So this is tech trying to get out ahead, isn't it?
Yeah, it really is. I mean, it's tech and banks where we've seen that.
Okay, we're going to talk Trump and his victory in New Hampshire.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of ON's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined ON as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but ON's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Welcome to Bloomberg Brief. I'm Manus Rennie in New York. Danny Berger in Cannes, speaking with the leaders of private equity. Here's what you need to know. Donald Trump beats Nikki Haley in the New Hampshire primary, increasing the chances of a rematch with President Joe Biden. China will cut its reserve requirement ratio for banks in early February, the bid to boost growth and markets. And in tech, Netflix surges on subscriber gains as ASML signals a revival in the semiconductor industry. All hail big tech. All hail Danny Berger in Cannes, having a beautiful backdrop to talk to the doyens of wealth. Good morning, Danny.
Good morning. Something feels so wrong, Manus, about talking about, is there going to be a recession? Do banks need to get out in front of rate cuts while there's like a dozen yachts behind me? Something about it feels a little bit inappropriate, I'll be honest. But Manus, I just have to say one more thing to make you jealous. I had 2 croissants for breakfast this morning, 2 freshly baked, beautiful French croissants.
You see, they're real. They're the real McCoy there. But you know, those mini yachts behind you, they're mere bagatelle compared to some of the things you see in the summertime down there. Okay, let's set the stage. What is going on in terms of the size of deals that are getting done and the quality? That's what I want to know. A bit of news rather than the croissants.
Yes, making a little bit of news here. We've had our first person say that there could be a double-digit private credit loan deal. And this is why it's interesting. It is tied to this idea of quality, Manus, because this was David Hirschman of Premier Credit who said that you actually want the large cap deals. These are the companies that have cash, that have good balance sheets, that if we're for an uncertain economic environment, they'll actually do well. So bigger is better.
And then, of course, you have the other narrative as well, the competition. Private credit was just this beast that just kept growing. But the narrative this morning seems to be that the banks are snapping at their heels. That's got implications in terms of human capital and in terms of competitiveness, hasn't it?
Right. I mean, investment banking has been tough. Jobs have been cut there. But if they're getting into these leveraged loan markets once again, perhaps that's a good area for growth. Now, the other area of growth, Manus, we've been talking about it all day because it's tech earnings, is AI. And private markets, they want to get in on the action too. But I spoke with the head of Europe of Investcorp, who warned it's a bubble. Take a listen, Manus.
A lot of venture has focused on AI because it is the hot topic, like blockchain was the topic maybe a year, 2 or 3 years ago. So of course there is an absolute bubble, but I think what's interesting is, like the quote I think is very relevant, it will have effects, AI, that is over the next decades. Like technology, I mean, it's not like disappeared when 2000 came and we had the crash. It's actually, today it's everyday's lives. And the same thing will be with AI.
I mean, as the conversations are going to continue in about 10 minutes' time, we're going to be speaking with the co-CEO of Eurazeo, that's Christophe Bavier. Eurazeo, of course, a giant in this space, a giant in European and French private equity, so really looking forward to that conversation.
Well, let's see, does he call any bubbles or not? Danny, we'll be back with you very, very shortly. Danny Berger on tour in Cannes. Snapshot of risk. It is about policy, reaction functions, and politics this morning. You don't want to get vertigo. S&P 500, again, careering through new records on U.S. equities. UBS say, don't get vertigo. Stay invested at the highs. Monetary policy bangs up the Hang Seng as China goes for a liquidity injection by cutting the triple OR. That will inject 139 billion of new liquidity. Since November, the Chinese have put 3 trillion into this market. So you are just seeing a narrative of where Netflix is on fire. They're adding over 13 million subscribers. You've got tech on fire in Europe. ASML, the orders tripled there. Tech has added nearly 36 billion in market cap in Europe this morning. Roll it over and you'll see, again, the reverberations. There's ASML up 6.2% in Europe this morning. The reverberations of the China policy response come through in the iron ore market, despite inventories piling up 7% in January. The dollar drops by 0.3%. That is the biggest one-day drop so far this year, and yields give back a tick at the moment. With the former President Donald Trump is closer to grasping the GOP nomination, with Nikki Haley coming in a distant second place in New Hampshire. But the losses aren't stopping her campaign.
This race is far from over. There are dozens of states left to go. And the next one is my sweet state of South Carolina.
Okay, the New York Times is writing this about last night's primary. Tuesday night's results showed that the time is coming to sit Shiva for the Republican Party of the Bushes, the Cheneys, the Romneys, and that the donor class that once played an outsized role in shaping the party is now a desperate group of bystanders. Bloomberg's Gregory Corti joins me now from Manchester in New Hampshire. It's a very, very different Republican backing for Trump at the moment. Just dissect the evening's events, and do you think Haley will last till we get to the next primary?
Yeah, so just like in Iowa last week, we had a very early evening. Former President Trump wrapped up this victory in pretty short order, and just seconds after the polls closed in the last part of New Hampshire, the Associated Press called the race for Trump. It was a little bit closer earlier in the night, but it settled in at about a 10 or 11 point margin for the former president, and that's about half of what the polls had been predicting. So in one sense, it was a pretty good night for Nikki Haley. She did much better than she expected. But in the other sense, look, former President Trump has now won Iowa. He's won New Hampshire. Neither one of those states is essential, but when you put them both together, it would be almost unprecedented for a candidate to come now from behind and win. But now we're going on to South Carolina, which, as Haley said there in that clip, that is her home state, and so that's where she's hoping to make a stand. She seems to have the donor support
Greg,
so far, but we'll see how that keeps going.
On that point, Greg, I mean, I was looking at a 538 compilation of the polls, and it gave Trump a 2-1 chance of winning in South Carolina. As you say, it's her home state. If it looks unlikely for her to win it, why take the risk to her brand and reputation there?
Yeah, the decision about the timing of when to get out of a presidential race is almost as important, maybe more important, as when to get in. And one of the calculations is, what does she want to do? What is her political future? Has she already burned a bridge with Trump and decided that she will not be serving in a future Trump administration? That has motivated a lot of the candidates who have gotten out so far to drop out. We saw Vivek Ramaswamy. He talked to Bloomberg News from this very set last night and seemed to be open to an idea of serving in the Trump administration. Ron DeSantis now has mended with the former president. Haley, as long as she has the donor support, may want to continue. But yes, she is going to be looking very closely at those polls in South Carolina to see if there's a realistic chance that she can pull it off. It's more than a month. It's about a month away. And that's pretty unusual in the primary calendar to have that much space. So she does have some time to kind of reassess where South Carolina is after her performance last night.
Yeah, it's certainly going to be an interesting 30 days. And I think Trump said, if she doesn't drop by, this is what he said to Fox News, if she doesn't drop by, we have to waste money instead of spending it on Biden, which is our focus. So again, it's a question of whether it's going to be a short, sharp victory lap for Trump or whether Haley goes head-to-head with him. Gregory, thank you very much. Staying up late, getting up early. It's been a beast of reporting for you and the team. Well done. Gregory Corti there in New Hampshire. From the elections to electric vehicles, Tesla reporting their earnings later today after the bell closes with its 2024 deliveries in focus. Bloomberg's Craig Trudell joins us now. I just looked at BYD in China, taking the #1 spot. So the pressure is on for Tesla to deliver. What kind of number are we looking for, and where will the biggest buyers of Teslas be?
Yeah, I think the number that the investors are particularly going to hone in on tonight is going to be the profit margin at Tesla, and particularly automotive gross profit margin. This was a figure that when you back out the regulatory credits that Tesla sells at, essentially, pure profit, this was a figure that was around the 30% range in early 2022. It's now kind of hovering in roughly half that level, and that's really been a cause for concern, just the persistent price cuts that we've seen Tesla make to sort of sacrifice profitability for volume. There's been some willingness, of course, to tolerate that. We did see the stock perform pretty well last year. The question is how much longer that can last, especially if we don't see some stabilization in the margins, and that's something that's going to be the topic of conversation on the call as well.
Well, Craig, Tesla has potentially one less competitor to deal with. Bloomberg, of course, learned that Apple is now delaying their plans for self-driving features of a car. They're going to be delaying that launch. I'm going to be 100% honest, Craig. I forgot Apple was even planning on doing this. I mean, it does seem a little bit odd to their strategy, but what accounts? Sorry, what accounts for the delay here?
No, I don't hold it against you, because it has been the case that it feels like a good 6 to 12 months tends to go by between the latest update of what Apple's up to here, and I think it's not necessarily a surprise to see the company sort of put aside this ambition of a fully self-driving vehicle, even a self-driving vehicle in certain environments, because this has proven extremely difficult for everybody, whether you want to talk about Tesla or just all of these sort of incumbent car makers that 6 years ago or so were all talking about having driverless vehicles on the road at this time. I do think that there is some very interesting material in Mark Gurman's piece on this that I would encourage viewers to check out, because the idea that the company is kind of viewing this internally as a make or break moment. If we can sort of lower the bar for what this product can accomplish and get it out in the next few years, if we can't do that, then maybe we need to reconsider whether we move forward with this project at all. It's absolutely a fascinating story.
Craig, thank you very much. Great work by you and the team. Craig Trudell on the tech stories coming up. Danny has more from Cannes. You cannot get enough of it. The leaders of private equity sitting down. Christophe Bavier with Danny Berger in Cannes on tour on Bloomberg.
financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
This is Bloomberg Brief. I'm Danny Berger in Cannes. Manish Krani is in New York. Now, Manish, we are here in Cannes at the IPEM conference for private capital. We've been having a lot of conversations. I'm really pleased to continue the conversation now with the co-CEO of Eurazeo, that is Christophe Bavier. Christophe, thank you so much for joining.
Thank you, Danny.
I want to take you back to 2011, because in 2011, Eurazeo had a monster bet on Montclair. It was so successful. It ended up IPOing here in the year of 2014. What is your Montclair? What is your monster deal?
Oh, we have plenty of them. How many hours do we have? Because there are so many, the beauty of what we can do. Eurazeo is a full specialist of mid-market companies all over Europe. And the beauty of Europe is that it's full of hidden champions like Montclair. People see it when we are exiting. The benefit of the expertise of our teams is to be able to identify them at the starting point. Because there are plenty of them. We just exited some companies last year, which was obviously not easy. Maybe some less brand names than Montclair, but we have a lot of them that will be shown in the future years of Eurazeo.
It has been a strange couple years, shall we say. And to encapsulate it, Bloomberg spoke with Apollo, who basically said that people overpaid for private equity assets. And it is this year, end of 2023 and this year, that the air is starting to come out. Is he right that people overpaid and now that's starting to undo itself?
It's true that we have been through an incredibly positive cycle. We benefited from a very long period where debt was easy to get access to and incredibly cheap. This has influenced prices, no doubt. The environment is obviously entirely different now. It may be a little bit too soon to know if the price of some asset have been overpaid. What we need to focus on in what can you do right now to bring value to your portfolio companies. And this engine of the private equity industry, it's not broken. There are plenty of opportunities today to help your companies to grow. And if a price has been overpaid at some point, you still have time to compensate.
I mean, there are those who are struggling, and maybe as a consequence of that, consolidation is a very live topic in this industry. People looking for white knights. Would Eurazeo be that white knight? Would you be interested in doing a transformational acquisition?
We are much more interested by joining forces, by people that are looking to grow faster, to be stronger, to be more international, than to be the white knight of some competitors that needs to be backed. That's definitely, and there are plenty of ideas. The industry is full of opportunities.
Well, the French press was reporting that you're looking at Astorg. Is that just wrong then?
You see, we don't comment, but there are so many opportunities, so many ideas. And again, there is absolutely no hurry. You know that we just clarified our strategy. We want Eurazeo is a clear leader in the mid-market all over Europe. We want to stick to this. We want to accelerate in this direction. And obviously, just after announcing a strategy, we are not in the process of finalizing anything.
Right. And to that point, I mean, strategy has changed. And it was a tumultuous year. Virginie Morgan left after shareholders pushed her out. You became a co-CEO. There were concerns about departures. Where are you now in stabilizing the ship?
It's behind us. It's done. We have been obviously working a lot on stabilizing, obviously, teams internally, on stabilizing our interaction with our LPs and with our portfolio companies. But this has been done largely during the first half of the year, and we are back in business. We were back in business during the second half of the year, and definitely for us, 2024 is a year of acceleration.
I have a quite biting quote I want to read to you. It's from a Bloomberg opinion writer, Lionel Laurent, and he had this to say when the transition happened. As flawed as Morgan's tenure was, its end signals that private equity remains one for the boys and the billionaires. Is Eurazeo, and even private equity as a whole, is it still too much of a boys' club?
Well, things need to get better, and we are working a lot. I mean, not only us, and the entire industry on us. But when you look at, for example, the proportion of women in our executive committee, it has increased. It is now close to a third. Is it the final step? Are we satisfied by that? Obviously not. Do we still have hard work to do to better include women in our top management? Yes. But the message cannot become only on one single person in the industry. The entire industry needs to continue to improve its standard on this, and we are doing it.
Speaking of the hard work to do, the ECB has been pushing back a lot about rate cuts. Everyone thought that they would come early this year, and last week in Davos, basically every ECB policy member said, we're not overeager to do it. Are there those who are going to be in trouble in this industry if rate cuts don't come this year, that they have just been extending and waiting for that moment for cuts to happen?
I think it's obviously important. Rate cuts obviously improves the general macroeconomic environment. But our industry need also to concentrate on the old recipes to bring value, which is not only to bet on cut rates, it's definitely to also work a lot on your portfolio companies. You know, and especially when you are working in the mid-market, and you were kind enough to remind that the European market is full of hidden champions like Moncler, but when you work a lot with the real source of outperformance are in helping your company to improve their operations, to improve their productivity. The European market is full of buy and build opportunities as the European industry needs to consolidate. And last but not least, mid-market companies, you can help them to accelerate internationally. So to a certain extent, what needs to be done in our industry today is to go back to basic, and not only to bet on significant leverage, not only to bet on the fact that leverage can be cheap at some point of time. When I started, I'm becoming a veteran in this industry. When I started, you know, we were experiencing double-digit interest rates, and the industry was largely successful. So we need to go back to basics.
The days of financial engineering are basically over, it sounds like.
To a certain extent. There is still some very interesting values that you can bring by financial engineering also.
Okay, Christophe, we're going to have to end it there. Really wonderful to speak with you this morning. That is Christophe Bavier, the co-CEO of Eurazeo. Manus, I'm going to be honest, I was trying to get a Moncler for you out of Christophe, but maybe next time.
Just get a discount card. We're fine. We can have a discount card. We can share. Danny, great conversation.
There you go. There you go.
Great conversation, and more of them to come. Danny Berger in Cannes. A quick snapshot of what is the reaction function in markets this morning to policy in China, which obviously has moved on the yuan, but we've got the dollar down there by a third of 1%. Biggest drop of 2024. Sterling is actually up because you've got nice high PMIs, the highest in 7 months. Traders paring back their bets on rate cuts in the United Kingdom to less than 100 bips for 2024. And the euro obviously is just a reaction function of the dollar. Obviously the PMI is coming in there showing the ECB has a little bit of time on its hands to react. The PMI survey can allow the ECB maybe to delay in their attention to cuts. 47.9 for January, up from December's 47.6. Coming up, we'll take a look at some of the market-moving events on Bloomberg.
Warren Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Brief with me, Manus Cranney in New York, Danny Berger on special assignment in Cannes. Quick snapshot of what's ahead today. US PMI will hit the tape at 9:45 Eastern Time. Plus, Bank of Canada out with its rate decision at 9:45, followed by Governor Macklem's news conference. And we get the Tesla and the IBM earnings after the market closed. Danny, that's as BYD takes the #1 crown in China in terms of EV sales. But you've had a real sort of stage setter of how the rest of the year looks for private equity. Top thought?
Yeah, I mean, look, the theme to start this year really has been cuts aren't coming as soon as we expected. And for this industry, for those who are over-levered and paid a high price, perhaps you're in trouble. We were just speaking with Eurazio Manis, who said, look, you need to be prepared for that. You need to get back to basics. It's about growing companies, not just, valuations all going up because debt is cheap.
Okay, well, enjoy the rest of the day. Keep your hands off those croissants. You can have a little bit of beef bourguignon later on, a glass of red wine.
No promises.
I don't know whether the expenses will stretch that far for you. Enjoy the day. Bloomberg Brief from New York and Cannes. Surveillance is up next.
off with a very simple question. Has the whole Brexit process been messier, less messy, or as messy as you expected way back in 2016?
Was it as messy as we thought it would be? Probably was, and I tell you why, because of the fundamental mismatch between, if you like, rational policy in the UK and what was, in a sense, performative ideology in the UK. And I think that was the problem. We could have had the deal, the so-called Windsor deal, several years ago, but the Johnson government simply did not want a deal on those terms.
But I think for the short to medium term, the next 3 to 5 years, the Brexit will be net negative on the UK economy, no question about it. What happens over the longer term depends on what the British establishment or the future UK governments do. One, I do think ultimately they will finish up in the next 10 or 15 years putting some kind of, I call it a trade deal with Europe similar to Norway or Switzerland. I disagree with Declan. I think they will pay into a European budget. I think they will have no choice. It is too big. The fundamental strength of the single market is something that is too attractive for the UK economy to be excluded from.
Maybe the messier part is yet to come.
Landing right now. We're looking at the data. The data looks strong.
Look at the data. It continues to surprise to the upside.
That even if the activity side of the economy is doing well, as it is, it's really the deceleration in inflation.
It's actually not that easy to get inflation down that quickly. It's going to take more time.
As we get into this year, I think a big stepping back thing is that we're going to see what kind of economy we have.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance alongside Lisa Abramowitz, together with Anne-Marie Hordern. I'm Jonathan Ferro. 4 days of gains on the S&P 500, 3 consecutive all-time highs. Breaking news overnight, Trump on the cusp of clinching the GOP nomination. The votes going his way in New Hampshire. 91% of the ballots counted. Here are the numbers. For Haley, 43.2. Bramo for Trump, 54.5.
This is completely expected. Let's just put that out there. Everyone expected Trump to probably win. The question now is, does Nikki Haley drop out, given that she had a pretty victorious losing speech while we heard from Donald Trump a sort of fiery, angry winning speech? So here's the question. What's next, and what is Nikki Haley's role if she basically has no path to become the nominee?
Well, she came out and she said New Hampshire is the first in the nation. It's not in the last. She has some money. Before New Hampshire even started to spend in South Carolina. But if you look at the South Carolina polls, it looks like she is going to be embarrassed in her home state. So there is this potential, but she also might just want to hang around if for some reason Trump could not run in November.
Okay,
She got some delegates last night.
This, to me, is one of the most interesting aspects of all of this, the hope and the dream that it's something other than just a matchup between Biden and Trump. I just want to point this out. With more than 3/4 of the vote in, more than 2 in 5 voters voted for someone other than Biden and Trump. People don't want this matchup based on the voters. So the question is, what could interrupt that?
They don't want that matchup. What Joe Biden is going to say when it comes November, he's going to say what his father has always told him. Joey, don't compare yourself to the almighty. Compare me to the alternative. And that is the Democrat hope. People will get into that voting booth, hold their nose, and once again vote for Joe Biden instead of Donald Trump.
Is that the pitch from Joe Biden? Is that what he's
Not
saying?
officially.
Joey? It certainly sounded like Joe Biden. That was a decent impersonation. If we're down to 2 and the electorate's deeply unhappy, dissatisfied, Bramo, markets right now don't care. Equity futures are positive again on the S&P 500. Check out shares of Netflix. Juice in the move higher in after hours. These numbers, the best quarter of sub-growth since the pandemic. They beat projections in every region of the world. The ad-supported tiers picking up. Bramo, the password clampdown is paying off. We're up by 9.6%.
People are wondering, is there anything underneath this incredible rally that we've seen in the Magnificent Seven, and we're seeing inflows into it? here's the thing, the profits are there. They're able to deliver. And you could say Netflix, whether it was content, we heard that yesterday, whether it's just the fact that they have such a critical mass and everybody's tied to their phones, but the fact that they were able to add the greatest number of subscribers to the heart of the pandemic, when all of us were looking for any screen possible to potentially hook our kids onto so that we could have.
Do you know what's under it? At least what I think is under it? David Beckham. That documentary came out the last quarter. Even my parents sat down, watched it, and then my mom said, I'm going to get a Netflix account. She's not going to try to get on my password sharing. She got her own Netflix account. That documentary, honestly, fantastic.
Up by, by 9% this morning in the pre-market, at least for now. Down to David Beckham, apparently, according to AMH this morning.
And Victoria.
The broader market on the S&P 500 is shaping up as follows. Equity futures look like this. We are positive, Lisa, by, let's call it 21 points on the S&P, up by 0.4%. Yields coming in 3 basis points. On a 10-year in America, 410. I have to tell you, the JGB market looks very, very different to what you see in Treasuries today. Yields up in Japan. We're talking about rate hikes all over again.
People are expecting them to actually make that move, and we heard that with the Bank of Japan, maybe indicating they were prepared to shift some of their strategy. But here's the thing: people have been expecting this a long time. I think the sort of common feeling is April is when they're going to abandon negative rate policy, and so maybe you'll get some kind of action in JGBs.
Coming up in the hour on this program, this is the lineup for you. Chris Morangi of Gabelli Funds on the market rally, Bloomberg's Katie Lyons on Trump's decisive victory in New Hampshire, and Mandeep Singh of Bloomberg Intelligence on tech earnings. All of that still to come. We begin with our top story this morning. The stock market rally continues with tech earnings underway. Netflix posting its biggest subscriber gain since the pandemic. Chris Morangi of Gabelli Funds saying the pressure is growing for media to merge and compete. Writing, quote, the march from analog dollars to digital dimes continues. Media's industry structure will never be as favorable as in decades past. Chris Morangi, co-CIO of Gabelli Funds, joins us around the table. Morning, Chris.
Morning.
Is it going to be bad for industry and bad for consumers too?
Well, I don't know how it shakes out for consumers. We're going to need consolidation. Netflix, the quarter that they put up, shows that scale matters. We used to talk about the insurgents versus the incumbents. Netflix is now an incumbent. They're clearly the global leader in streaming, and they are able to flex that muscle and adding subscribers and doing the deal that they did yesterday with Raw. And the rest of the industry, the former incumbents, are going to need to follow.
So does this mean that you expect Netflix to acquire someone?
Well, clearly, they didn't need to say it, but they said in their letter yesterday that they don't intend to acquire any linear programming companies. That's not a surprise. They're not going to do that. They're going to add content. But it's really the former incumbents, the linear companies, are probably going to need to rationalize the mess of streaming services that we have out there. And that can happen through consolidation. That can also happen through partnerships.
Okay, so let's just sort of break this down from your investor hat. Where do you lean in and where do you lean out? How do you play this if disruption could potentially be really profitable?
Well, first and foremost, we like the IP owners, those who own the content themselves, and those are hard to find. One place we found them is in sports. The owners of sports properties, demonstrated again by the WWE deal yesterday. This is the content that people want to watch, that advertisers will pay for, and so that's first. Second, we're looking for some of the undervalued media companies. I mean, you look at Warner Brothers Discovery or even Paramount. Netflix today is out of the entire enterprise value of Paramount, which is $22 billion.
Can we pick up on the sports deal first?
Please.
And get to sports. It's tough for the media companies when they have to lease the asset and they don't own it. ESPN is clearly a struggle right now. Disney doesn't seem to know what to do with it based on the last 10 years or so. What does that look like in years to come? They've paid up big time for some of these assets. They don't own them. Are we getting to the point where maybe we've reached the limit on the price of that asset?
Well, again, Netflix paying $5 billion over 10 years for WWE, which is arguably a sport, well, arguably not.
Kind of.
I think is an indication that sports rights values are continuing to go up, and they're going to go up. And you have the tech companies are going to be players. I think you're going to have the leagues as players too. The MLB, I think, has a vision of owning some of the streaming services themselves. Perhaps the NFL or somebody else gets involved in ESPN. We'll see. But I would expect the big tech dollars to start flowing.
Can I just set the record straight? There's no way that WWE is a sport, because when you have a predetermined outcome, it is pure entertainment. I just want to say that. So just set the record straight.
You haven't been involving soccer closely enough, apparently.
I will say, though, when you look forward at exactly how this evolves, how do you understand whether you're really investing in a company for the quality, for content spend? Remember, everyone was worried about too much content spending versus sort of the winner-take-all kind of thesis.
Well, again, it all comes down to price and what do you pay. Netflix, obviously, is a phenomenal company. they're going to have tremendous growth over the next few years. It's trading at 30 times EBITDA, something like that. Is that a price that you want to pay? Is there a margin of safety to be able to own Netflix at these prices? For somebody like us, that's hard to do. Warner Brothers, Paramount both have their challenges. They're trading at, call it 5 or 6 times EBITDA. And so there's a lot of opportunity if they're able to get the model right. So that's the balance that we weigh.
Will we see more of sports teams or venues take on the distribution like MSG or Yes? And then it goes to the fact that the sports team needs to be pretty relevant and popular for that to even work.
Yeah, and again, you're seeing signs of that. You had in baseball and basketball, Diamond Sports go through bankruptcy. Amazon is potentially investing, recapitalizing that. So I think that the teams are certainly interested in viewership and gathering eyeballs and in making money, and perhaps that means taking ownership stake in the media rights.
Could potentially Netflix ever be one of those destinations?
Well, interestingly, Netflix talked about being in sports-adjacent properties, not sports properties, and I think they put that in there specifically to note that they're probably not going to be a bidder on the next big media sports property, which is the NBA later this year.
You mentioned this at the start of the conversation. Let's try and finish there. Are we building a model that consumers dislike and companies struggle to make money with?
Well, I don't know. Are consumers happy today? There's more content than ever before.
I'll speak for myself.
It's harder to find.
I'm deeply dissatisfied that I have about 8 different apps and I'm paying $10 for each of them.
And the industry is very well aware of that, and I think there are ways to fix it, including consolidating streaming services, also bundling streaming services. We're going to have a reaggregation led by the cable companies where you, as part of your broadband service with Comcast or Charter, you get a box that puts all this stuff together.
Back to a bundle.
Yeah.
Back to the bundle.
Bramo, back to the future.
This is basically what we heard, right? What's the new model? It's the old model. And that's where we're heading. And that's what everybody has been saying for the past, 18 months.
Any idea of what the price point on that looks like?
Well, it's probably cheaper than the big bundle, but not as cheap as you think it would be.
So the broadband providers are going to be the ultimate winners, and they're going to have to consolidate the whole thing.
Well, the broadband, we've always talked about the broadband hedge, which is you need broadband to do any of this.
Sure.
And in most of the country, that was the cable company. Over the last 18 months or so, you've seen wireless take share, and that's been the issue with the cable companies. Comcast reports tomorrow. We'll see how many subscribers they lose to the fixed wireless operators.
And Netflix this morning up big time in the pre-market. Chris Moranki of Gabelli Funds is going to be sticking with us. Your equity market on the S&P 500 right now positive by 0.5%. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hey, John. Former President Donald Trump has taken a decisive win in the New Hampshire primary, all but guaranteeing a 2024 rematch with President Joe Biden. Trump took 55% of GOP primary votes, with 75% of ballots counted, comfortably beating his only remaining challenger, Nikki Haley. The former UN ambassador has vowed to stay in the race and now looks to her home state of South Carolina for support in the February 3rd primary. Chip maker ASML saw orders more than triple in the fourth quarter. Demand for products from Europe's most valuable tech company increased, especially for its state-of-the-art lithography machines. CEO Peter Wanenk emphasizing the company's role in the AI frenzy.
One thing is absolutely sure. It's going to need massive amounts of compute power and storage, data storage. So I think without ASML, without our technology, that's not going to happen. So it's very clear that it's going to be a big driver going forward for our business and the business of our customers.
And Europe's top economies are seeing a tough start to 2024. PMI data shows private sector activity contracted for an 8th month, with Germany and France in particular seeing bleak results. The data comes a week before the euro area is set to report GDP, which will likely show recession. Meanwhile, UK PMI data shows inflation worries have returned thanks to the conflict in the Red Sea. Private sector firms reported the sharpest jump in costs in 5 months. That's your Bloomberg Brief. John?
Yahara, thank you. Coming up next on this program, Trump cruising towards a rematch with President Biden.
This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night.
This race is far from over. There are dozens of states left to go.
That's coming up next on the program, live from New York City this morning. Good morning.
intersections of Hollywood, Silicon Valley, and beyond.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. When will the ECB decide to cut rates?
We are on the right path, but I'm not going to shout victory.
Bloomberg Television brings you the breaking news and detailed analysis after ECB President Christine Lagarde's press conference.
The wages issue is what I think the ECB is really focused on.
June is our base case.
There is still a 50-50 chance of a rate cut coming just slightly before that.
In many ways, they should have been cutting already earlier to stimulate growth.
The ECB decides Thursday on Bloomberg Television.
Live from New York City, here's the price action on the S&P, higher again by 0.5% on a 4-day winning streak on the S&P 500, the longest winning streak of the year so far. Yields lower by 2 basis points on a 10-year, 4.1051. Under surveillance this morning, Trump cruising towards a rematch with President Biden.
You know, we won New Hampshire 3 times now, 3. This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night.
New Hampshire is first in the nation. It is not the last in the nation. This race is far from over. There are dozens of states left to go.
Here's the latest this morning. The former president defeating Nikki Haley in the New Hampshire primary. Trump claiming victory by 11 points with over 90% of ballots counted. Haley trailing by over 30 points in polls heading into the primary in her home state, Anne-Marie, of South Carolina next month.
Yeah, it's pretty rough when you look at this polling, Jonathan. We put the aggregate together with 538. Trump is averaging 62.2%. Haley is averaging 25% heading into what she said her sweet home state of South Carolina. And then you look at the endorsements in South Carolina, whether it's the governor, lawmakers in Congress, or statewide officials. Donald Trump has 13 in his camp. She has 1.
Steep hill to climb. Kelly Lights joins us now from Manchester, New Hampshire. Kelly, let's talk about that. What's the argument for Nikki Haley to stay in the race?
Well, what Nikki Haley will tell you, John, is that South Carolina is her home state, that she intends, with the ample resources at her disposal, to put up a good fight there, and that actually, looking beyond that South Carolina primary on February 24th to Super Tuesday, that we should all keep in mind 11 of those 16 states and territories that vote on that day have open or semi-open primaries. The thinking being she could potentially attract independent, maybe former Democratic votes in those states. The thing is, in New Hampshire last night, where the base of voters is significantly more independent and moderate, 40% of those registered here were undeclared voters, she couldn't get it done. So how could she get it done in these other states, especially in light of what could be intensifying pressure on her to drop out of this race, not just from the MAGA base that, of course, is very present in South Carolina. She could face a lot of attacks from Trump and his allies, but even establishment Republicans are now lining up to say we should all fall in line behind the presumptive, at this point, nominee Donald Trump. Big leaders in the Senate, for example, in addition, of course, to the other endorsements that Trump has gotten from previous candidates in this race, like Senator Tim Scott of South Carolina. So it definitely is going to be an uphill climb, and a lot of it could depend on whether or not big money donors continue to back her. Keep in mind, guys, 4 days from now, where you are in New York City, a big fundraiser is going to be had for Haley, held by the likes of Ken Langone and Stanley Druckenmiller. To this point, a lot of these big Wall Street donors have still been backing her. The question is, will they continue to throw good money after potentially bad if she continues to languish behind Trump in polls in future contests?
Yeah, we'll have to see if the donor class continues to shore her up following this loss in New Hampshire. But Kaylee, as we look to this general election, the one that Lisa continues to say, it's the one that no American really wants, according to the polls, the Biden campaign last night issued a statement that seemingly felt like they were eager for it to be Trump.
Well, and that's what we've thought all along, that actually of all of these different Republican candidates, of course, now there's only two left, that Trump was the preferred outcome for the Biden campaign because Biden has beat him before. He did so in 2020, and at least the campaign believes that he has the ability to do it again. Biden put out a statement last night saying that it's clear that Trump is going to be the Republican nominee. He said his message to the country is that the stakes could not be higher. Our democracy, our personal freedoms are all at stake, and that really is how he is trying to characterize this race moving forward, as something fundamentally about the future of American democracy and the threat that he says Donald Trump poses to it. Keep in mind, though, guys, that in the states that ultimately could decide this election, when we're looking at the Electoral College, it's the swing states that are going to matter. And in most, if not all of those, when you look across polling, Trump is currently leading Biden in them. Of course, it's a long way to go. This would be one of the longest, if not the longest, general elections in history, if really it does begin now. The vote is still more than 9 months away. But really, Biden is hoping that it is going to be a rematch with Trump here.
Haley, I have to wonder, there's a lot going on or should be going on down in Washington, D.C. amid this sort of drumbeat to November. And there's a question of whether we're going to get budgets passed, about funding to some of our allies. I'm curious, Kayleigh, what the increasing acrimony, both with respect to this race, but also in the House, and the Senate, frankly, how Donald Trump becoming the leader now really plays into that.
Well, he already has been the de facto leader of the Republican Party, if you will, as he has remained not just a former president, but really the leader and the presumptive frontrunner and ultimate nominee. But the real issue in Congress that translates into this election is on border security. Here in New Hampshire, as we saw in Iowa last week, in addition to the economy being top of mind for voters, the border was top of mind as well. And we know that the White House and Senate negotiators are still currently working on a package to try to tie Ukraine funding to a border security deal. The question is going to be what the fate of that is in the House, whether or not House lawmakers, of course, led by House Speaker Mike Johnson, who talks frequently to President Trump, has a very close relationship with him, are going to pass a bill that could potentially be a political win for Biden, knowing that he has a problem at the southern border. He doesn't pull well on that issue. If he actually were to be seen getting legislation across the line to try to address that issue, it could actually play in his favor and against the favor of the former president. So as this election draws closer and closer, it may be more difficult for Republicans to actually be handing the White House those kind of political wins. And we know that Trump already has weighed in on this. He posted on True Social last week that House Republicans should only accept a perfect border deal. And we'll be looking to see whether he continues to put that pressure on so that they don't ultimately get this done.
Hey, Kayleigh, thanks for the update. Kenny Lyons there in New Hampshire. With us around the table here in New York City, Chris Marangi of Gabelli Funds. Chris, political risk, something we all hear about, struggle to quantify, and then attempt to ignore. What do you do with it in 2024?
Well, I think the question is, when does Wall Street care? And arguably in 2016, Wall Street didn't care until election night, when famously, futures sold off and then we had liftoff the day after. I think there's two parts here. There's the actual conduct of the election. Are we going to have a concession speech the day after? Or is this going to be another extended affair? And then there's the policy risk and what policies are going to change. We're already seeing some ink spilled about what happens to the Biden IRA. I think if you're an investment banker or sitting in a boardroom, you're wondering, if I want to do a deal, do I attempt one now under Lina Khan, or do I wait for perhaps more friendly Trump administration? So these are all things that we're thinking about. But yeah, I think Wall Street for the moment has enough on its plate, just going to ignore that.
Let's do some scenario analysis and go through it together. We all remember that night in 2016. I was on air when the headlines were crossing on the Bloomberg terminal, and you started to see futures bounce. And futures started to bounce on that speech by President Donald Trump when he started to talk about infrastructure spending. That was the very beginning of what became the Trump trade over the next couple of months. We started to focus on the policy and not the volatility that comes with the man. Is it different this time around?
Well, I think it is different because we have two known quantities, if they're the presumptive nominees. I think the knee-jerk reaction from the market will be positive toward Trump, with the belief that he will bring more pro-growth tax and regulatory policies. The reality is clearly going to be more complicated, but I'm not sure we get to that in November. That's probably more like a January type event.
Before we get to November, I am curious about whether you expect deal-making to accelerate or decelerate because of the uncertainty.
Yeah, well, we've seen an acceleration of deals. We've seen a lot of deals across a wide variety of industries in these first 3 weeks of the year. They tended to be small, made a lot of sense. Some of that is, I think, just pent-up deal demand as the financing markets have loosened up a little bit. We have a little bit more certainty on inflation and cost. So I think that backlog has to clear. But I don't know that anybody's going to attempt a really big deal before the election, because if you announce it today, it's probably not getting approved in time for the election to occur.
So investors may shrug off political risk in the United States at the moment. What about geopolitical risk? Every single day there is an issue in the Red Sea, and at some point this is feeding into corporate bottom lines.
It is, and obviously the domestic and international inextricably linked. If you believed President Trump, he'd suggest that he would settle Ukraine the day after he gets elected. We can all question whether that's true or not, and what the impact of that would be.
We hope it's that easy.
Yeah.
I suspect it's not.
I would agree. But how does that translate into prices? I'm not sure. Obviously, there's a lot of focus on the Middle East because it is the source of so much of the world's energy. The Red Sea, obviously a major trade route, especially important to Europe. And this is going to increase costs and increase supply chain costs, which are now only normalizing according to companies we're hearing on Q4 earnings calls.
Hey, Chris, thanks for being with us this morning. Appreciate it. Chris Marangi there of Gabelli Funds. Just want to check in on shares of Netflix in the pre-market, higher by something like 9 to 10% through most of this morning, following some blowout numbers. We're up by 9.9%. Plenty of reaction on the street here, Bramo. Mark Mahaney of Evercore saying 4Q profits were materially better than already high expectations, outperforming the stock. Price target 600 from 500. We're at 540.80 this morning.
The secret is that people are going to pay rather than have the service stripped away from them. And to me, that has been basically the unknown. A lot of people thought there would be a lot of cancellations with the password crackdowns. It turns out people might be unhappy. A Jonathan Farrow, who has to pay for 15 different services and struggle to find anything, might gripe about it, but they're still paying for it. And that's ultimately what they're cashing in on.
Yeah, there's three types of consumers. People who don't want to touch any of this. People who sign up, then sign back out. People like me, the idiots that provide all the money to them, who sign up for the services, then forget about them, never cancel, and use them maybe once a quarter.
I hate this. I hate signing up for a service because I feel like I'm wedded to it. I feel like there's no way I'm going to actually have the patience or time to go find exactly how to cancel it. And I think they're banking on that.
I signed up for Paramount just to watch the Italian football. I can't remember the last time I watched a game on there.
I also signed out for Paramount because Juventus was playing, and Jonathan called me and said, this is worth the whatever fee it was, and I still haven't canceled it.
And you're still signed up and paying for the service.
You should actually be paying for that.
Yeah,
I should take royalties from Paramount.
100%.
That's what should be happening here. Coming up on the program, tech earnings underway with Tesla and IBM reporting after the bell. From New York City this morning, good morning. You're watching Bloomberg Surveillance.
I think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty. guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention. As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question its industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
4 days of gains on the S&P 500, longest winning streak since the end of December. Equity futures right now look like this, positive again. All-time highs on the S&P and the NASDAQ. We had some weight to it, up by 0.4% on the S&P 500. On the NASDAQ, up by 0.6, call it 0.7. We'll talk about Netflix a little bit later. Lots of earnings, Bramo. AT&T just dropping.
Yeah, and I got to say, Chris Marenghi talking about how cable providers are going to take all. Well, maybe not yet. AT&T seeing a lower than expected earning per share for this year. The range being $2.15 to $2.25 versus the estimate of $2.44. Talking about revenue growth on the broadband side, about 7% going forward. I'm just curious when we see them start to consolidate some of the sexier parts of the business, like cable and content and all of those things, rather than just, the sort of boring, okay, I've got to pay my bill for the wireless and broadband. So, is that going to sort of transpire and elevate them to the next post-utility existence?
Stock is down by about 1% in the pre-market. Let's turn to the bond market just quickly. 2-year, 10-year, 30-year, shaping up as follows. Yields coming in a full 4 or 5 basis points on a 2-year at 432.21. On a 10-year, we're down about 2 here, Bramo, to 410.51. I mentioned what was developing in Japan. JG bill yields are higher. Yields here in America are lower.
That's been the story always, right? That the divergence, that Japan is just basically in a world of their own. I will say yesterday, Jim Bullard, the former head of the St. Louis Federal Reserve, came out and said that he could see the Fed cutting in March and talked about cutting rates more aggressively because there was a sort of window before the core inflation gets down to 2%. So a real push-pull here, and you're seeing expected March rate cut bets come up just a touch.
I'm pleased you brought up the difference between the BOJ and the Federal Reserve. So now we're talking about rate cuts at the Federal Reserve. We're talking about hikes at the BOJ. After we talked about hikes at the Federal Reserve and the BOJ doing nothing.
They like to dance to their own music.
Isn't it amazing?
Well, yeah, and here's the key. Is the Fed giving them a window to hike rates? That essentially they won't blow out their currency to such a degree in terms of strength that could really offset some of the gains. Honestly, a lot of people are expecting this. The question is just how they're going to do it in a less disruptive way. Remember 2 years ago, we were saying this was going to be Armageddon for markets. I know I'm using that word again. But,
yeah, no, sure.
And people were saying it's going to really be disruptive. It wasn't. It hasn't been. And now people are expecting maybe even in April abandonment of
I think I called it Operation Ostrich, didn't I?
I love that
BOJ,
phrase, yes.
head in the sand, head in the sand, and it's worked out. So far.
Maybe Operation Ostrich is the way to go.
So far. A week away from a Federal Reserve decision, just a couple of days away. In fact, 24 hours away from an ECB decision. Here's the FX market and the euro specifically against the dollar. The euro positive by a third of 1%, 108.93. Under surveillance this morning, former President Donald Trump taking another step towards a rematch with President Joe Biden. Trump easily defeating former UN Ambassador Nikki Haley in New Hampshire, posting back-to-back wins after cruising to victory in Iowa. Haley vowing to remain in the race, but options for her campaign and anti-Trump Republicans are running out. AMH, you've had a few hours to chew over the numbers. What jumps out to you?
Well, what jumps out to me is that it wasn't as bad for Haley as the polls were expecting, but at the same time, he is really consolidating his lead. It's back-to-back wins, as you mentioned, Iowa and New Hampshire, and it looks like it's going to be the general election rematch that most of Americans in polls don't want. And that's Trump versus Biden.
So there are two things. Number one, what's the point of Nikki Haley staying in? And a lot of people are thinking about this seriously in terms of, is this just basically a play that if Trump's legal issues become too onerous, that she can somehow take the helm? The other question is dissent among both parties. What happens if it is an unpopular election? And then from an investor standpoint, how do you arrange around this? We just heard from Chris Morangi. People aren't expecting to do big deals because how do you do a deal that's not going to close before a really uncertain election?
And you might get an easier regulator in the next 12 months as well.
Correct.
I think we are learning something, though, AMH. I'd love your view on this. Where independents are leaning, where they aren't leaning, and what this could mean for the former president on the national stage in the next 10 months.
Independents were certainly leaning towards Nikki Haley. So this goes to show that does Trump have a problem when it comes to the general election? I was also caught by the Biden campaign statement last night. This is what they said. Donald Trump is headed straight into a general election matchup where he'll face the only person to have ever beaten him at the ballot box, Joe Biden. There's only two people who have ever faced off Donald Trump in a general election, and that was Clinton and Biden. So that's their pitch.
Yeah, I mean, facts aren't popular in politics these days, are they? That's like kind of it at the moment. Let's turn to China, get some facts out of China for you. Authorities over there making another attempt to boost the economy. The country's central bank announcing a cut to the reserve requirement ratio by 50 basis points. The move becomes official next month in an attempt to free up lending and cash to the economy. China's government also mulling a $278 billion rescue package to backstop stock markets as growth worries continue. This is becoming an issue. We're talking about the plunge protection team for the equity market, the central bank coming out and saying we'll ease the supply of credit into next month as well. And you just get the feeling, Lisa, this is the beginning of it. It's not the end.
I don't really understand what the goal is, though, because right now, are they trying to ignite lending? The problem is demand for loans. It's not necessarily the actual rate, because rates are incredibly low. Are they trying to encourage international investors to come in? They also overnight recommended or basically banned certain transactions in onshore funds that had offshore kinds of accounts. At what point does this have the opposite effect of attracting international flows? If policy is just that uncertain and, frankly, that controlling and not sort of according to at least a U.S. version of a capitalistic economy.
Alicia Levine put it perfectly earlier this week. She said capital goes to where it's treated best, and right now that's in Netflix stock. That stock looks like this in the pre-market, surging. Trading in pre-market trading after reporting its best quarter of growth since the pandemic. Over 13 million customers signed up in the last quarter of 2023 thanks to a cheaper ad-supported version and a crackdown on password sharing. The company's guidance warning more price hikes are on the way, saying, quote, as we invest in and improve Netflix, we'll occasionally ask our members to pay a little extra to reflect those improvements. We're up by almost 11%, Bramo.
Honestly, it's basically the new tax of capitalism. I will just say this. When you sign up for something and then it's automatically paid, you don't think about it. So they could jack up the price $2 a month, and you don't think about it. You just pay. I wonder how much that's part of this whole dynamic. We're going to ask our clients, our customers to pay a little bit more. Yeah, they're going to kick up the price, and everybody's just automatically going to pay that, and that seems to be the tax.
Make it sound like a charity, you know.
Exactly.
You know, contribute a little bit more. You're enjoying the product so much.
It's not bad, at least if they have good content. As to our guest yesterday, content really is king when it comes to Netflix. They have a huge library compared to everyone else. And you look at that churn rate, people keep on to Netflix, hold on to that, versus all the others.
I guess that's really the key question, which is when do they drop the others, given the fact that at some point it's going to become onerous. How much is the bundle now if you put it together?
My bundle is more than the cable bundle.
Of course it is.
Let's put it that way. I think I'm going to have a spring clean, go through all the apps a little bit later.
What are you going to get rid of?
You want me to say this on air?
Yeah.
Apple, if we still got it, I'm not sure if we have. That can go.
Okay.
That can go.
Good to know.
Paramount, I know I've still got that. Maybe that can go as well.
All right.
Hulu gives me the Disney Plus ESPN bundle, so it's hard to sort of like separate all of that. But Hulu's got so expensive.
Yeah.
It's got ridiculously expensive. I'm paying an absolute fortune for that now. Plus you pay for the broadband connection as well. You're looking at 200 plus. Whereas cable all in with broadband costs what? 120, 150?
Correct.
Before, which is what you're still doing.
No, I'm doing it all.
I can always get the sense when you're looking down at what I'm doing, like. You know,
no, I'm actually not. I probably pay stupid amounts that I need to go through too.
Let's turn to tech earnings. Already kicking off. Tesla and IBM after the bout today. Tesla looking to deliver after losing pace among the Magnificent Seven in the rush to AI. Mandeep Singh, Senior Technology Analyst for Bloomberg Intelligence, joins us now. Mandeep, it's been a struggle for the EVs. We heard the news from Hertz in the last week. We saw what we heard from Ford just a few days ago as well. Mandeep, is it a struggle for Tesla as well, or are they different?
Well, so it's all about expectations. I mean, what Netflix did last night was a case of, low expectations and then kind of pulling the levers. In the case of Tesla, I would argue, expectations have come down, but clearly a lot is pinned on hope around AI and what they could do around robotaxis. And so far, they haven't given any concrete data points around, how they plan to monetize that business, except for the FSD charge of around $12,000 that you have to pay. And that's also a very low install base of consumers, the Tesla car users who have opted into that. So that's where, the top line growth continues to be much higher than the other OEMs, but that really the valuation multiple depends on the software and the robotaxi side of the business.
Mandeep, I got to say, Elon Musk overnight came out with a tweet basically saying that Tesla is an AI company with a car operation pinned on. How much is that going to be borne out in earnings? Essentially, if they disappoint with the car deliveries, they could still do well if they explain exactly how they are an artificial intelligence company and not one that just simply manufactures cars.
Yeah, and more so now with this wave of AI, the focus on large language models and how much data you need to train these models, it begs the question, Tesla already has about 5 million vehicles. They're about a $2 million run rate of new vehicles every year. So they could keep aggregating those miles, which you need to train the models. And we have the technology now with, these foundational models. So Tesla, in theory, should be leading the pack when it comes to autonomous driving, and they're the most committed. And they just need to articulate that in terms of how they are going to monetize it. And I think people will buy into that story.
The exact quote is, Tesla is an AI robotics company that appears to many to be a car company. Mandeep, BYD looming large over Elon Musk's head. And overnight, we heard from the executive from BYD, the Chinese EV car manufacturer, just basically amping up this competition. How much are the Chinese EV manufacturers eating Tesla's lunch in a material way?
Well, I look at it this way. Last year, Tesla's chargers were used by a lot of the OEMs who wanted to roll out EVs. And that, to me, is a validation that Tesla has the footprint now when it comes to being that early company around EVs and having the infrastructure. And let's say if other OEMs start licensing their software, the autonomous driving software, that will be another big validation. In the case of BYD, it's geographically limited, and I do think they don't have that infrastructure when it comes to charging stations and other kind of things that you need, for that mass adoption.
When you look at autonomous driving, Mark Gurman of Bloomberg is talking about Apple now. They wanted this truly driverless car. It seems that they're shrugging off those ambitions and now trying to bring an EV to market. What's going on there?
Well, so clearly, I think you are seeing different approaches from different OEMs. But in the case of Tesla, they have the lead, even though you could argue, level 5 autonomous driving is hard. And nobody thinks Tesla's current FSD software is level 5. They're more level 2 and 3. And that's where every OEM is right now struggling to come up with a strategy, and they haven't figured out what the best combination of sensors is, whether you need a LiDAR or you can just build a camera-based vision. And I think things will get pushed out when it comes to level 5 driving.
Mandeep, appreciate the update, sir. Mandeep Singh there of Bloomberg Intelligence on the earnings still to come. We'll hear from Tesla a little bit later. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara. Morning, Yahara.
Hi, John. Hamas officials have told international mediators they're open to releasing hostages in exchange for a month-long pause in fighting. Mediators are pushing for a phased approach that would start with civilians and end with soldiers. In return for a break in hostilities, the release of Palestinian prisoners, and more aid to Gaza. SAP will restructure its workforce to increase focus on artificial intelligence, affecting about 8,000 jobs.
We are investing in AI, over $1 billion for the next 2 years. While, of course, we're also applying AI internally. We actually expect that at the end of the year, we actually end up with the same headcount as we left 2023. And for the years to come, there will be investments, there will be headcount growth, but of course, under proportional to our top line growth.
The software company's shares surged on the announcement. Actor Ryan Gosling has pushed back on Barbie's mixed Oscar nominations. He's up for Best Supporting Actor, while co-star Margot Robbie and director Greta Gerwig were left out. Gosling writing, quote, "To say that I'm disappointed that they are not nominated in their respective categories would be an understatement. And that's your Bloomberg Brief. John?
Yahara, thank you. I'm not saying anything. Please, the floor is yours.
All right, I will just say this about Barbie. I know it's supposed to be about female empowerment, but the problem is that the men are the best characters. And I feel terrible saying this, but they're funny and they're sort of like create the plot. You're shaking your head, but I think that there is this sort of underpinning of, it kind of is counterintuitive. And then, of course, if they get snubbed, people are making all sorts of...
I'm looking at Ryan Gosling's statement right now. There is no Ken without Barbie. How does Barbie get snubbed and Ken gets the award?
Is this why you're wearing pink today?
Is it? I'm actually not, but I'm so happy I did because I think it's the subconscious.
Someone at the Oscars has got a dark humour, haven't they? I mean, come on, it's like down with the patriarchy, and then they give a nod to Ken and snub Barbie.
But what actually emerged from that movie? What was the swag? It was I am Knuff. That was really what it was. It wasn't, Barbie swag. I mean, to some degree.
And let's be clear, there were some other Oscar nominations in the movie as well. Right?
America Ferrera.
Right.
Fantastic performance.
Yeah.
I think she's also disappointed because the director who went out had this huge campaign. They made so much money. It was a true blockbuster hit. And Barbie herself got snubbed. The whole point of the movie was, like you said, down with the patriarchy. Yet Ken, at the end of the day, made it out on top.
I'm sorry, awards aren't charities.
I think there's no upside for me to say anything. Up next on the program, I'm going to sit this one out. The ECB and the Fed on deck.
I see a slope downward, but certainly not a slope which is at target.
That conversation's coming up next. You're watching Bloomberg Surveillance.
Tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite. You're running USAID. How many employees does it have?
We had 11,000.
And did you feel qualified to run something that big?
I did until, the work started.
The best thing that's happened this week. Bramo versus AMH on Barbie.
Let's move on.
What'd you say? It's not a charity or something like that.
Look, I have an unpopular opinion. I want just to lean into that.
It might be popular. You never know.
All right, let's move on.
Maybe Anne-Marie's view is unpopular this morning. You're enough. Okay. Under surveillance this morning, the ECB and the Fed on deck.
When I look at a year ago in Davos, and when I compare that with where we are today, I see a slope downward, but certainly not a slope which is at target. I would have said a year ago that we are determined. We want to get it to 2%. I would say to you now that we are confident that we will get it to that target 2% medium term.
Investors betting on global central banks to cut rates with the ECB decision due tomorrow, the Federal Reserve decision a week from today. And Bramo, I'm not saying it's going to happen in March or anytime soon, but that's the direction of travel based on communication like that.
The key difference for me is how far are they going to cut, given that they got inflation wrong? And I was really interested in what Catherine Nice, a former Bank of England economist, writing in the FT, put simply, it's a case of once bitten, twice shy, and policymakers will want to make sure that the inflation genie has been put firmly back in the bottle. 2Q, second quarter, is the earliest period in the frame for cuts. Again, this is sort of the big divergence right now, not whether they're going to cut, but whether they're going to cut more aggressively or whether they're going to take some caution from the fact that they got inflation so wrong in the aftermath of the pandemic.
Let's get into it with the brilliant John Riding, Chief Economist Advisor at Breen Capital. John, good morning to you.
Morning, John.
That word confident, can we pick up on that word confident? How confident are you that we're on a glide path back to 2%, both for the Federal Reserve and the ECB?
Fairly confident, provided both central banks continue to push back against the markets. Because this is an important point, and I think Governor Waller last week laid it out reasonably well. There's a difference between cutting interest rates and easing policy. And this hasn't been communicated particularly well. Inflation's falling. As inflation falls, interest rates adjusted for inflation, real interest rates get higher. So does the Fed and the ECB want to be tightening policy by not lowering the policy rate as inflation approaches 2%? And the answer is no. The market, however, is going differently. They're putting in these aggressive cuts. And aggressive cuts historically have been to fight a recession or potential recession when inflation's been relatively under control. So I think the central banks have driven home a couple of messages. One, we're really serious about 2%. And secondly, we are not going to cut aggressively. We're going to keep policy restrictive while we lower rates. And that's sort of subtle point that the markets are missing right now.
What kind of language would you expect to hear next week then? Things like we need to calibrate policy, need to adjust rates, surgical rate cuts. What kind of language would you look for?
I think things like that. But the main thing is the Fed and Powell is not going to be in a position in the press conference to green light a rate cut in March. I think the Fed's thinking probably June at the earliest, and they're going to be pushing. There's no new interest rate forecast come out at this meeting for them to frame the discussion. The problem is Powell did a very poor job in December in opening up and talking about what's natural that we talked about rate cuts, to the point where John Williams from the New York Fed had to go on a different channel 2 days later to try and set the record straight. And it's really, he needs to do a
and all of the risk-taking that we've seen. We've seen peripheral spreads come in dramatically in the Euro region. In the U.S., Priya Misra was sitting in your seat yesterday and said she's the most bullish on high-yield bonds that she's been in a long, long time. Are we going to hear direct pushback from the central bankers this week and next?
We're going to hear continued pushback, as we heard last week from Waller, as we heard last week from, in that clip you had from President Lagarde, that the markets are ahead of where the central banks are. And as for, getting puts, we're not out of the woods yet in having a recession. That's something that one of the really weird things I haven't figured out in markets is you have risk assets like high-yield bonds pricing in a good economy, and you've got the interest rate markets pricing in a recession, because if the Fed is going to cut rates that aggressively, we're probably going to be in recession, and then that's when spreads blow out. So there's a sort of disconnectedness between the rate markets and the spread markets right now.
There's only a disconnectedness if you think that the immaculate disinflation isn't going to continue. If you think that people have gotten ahead of themselves in this idea that inflation will naturally come down as the supply chain effects and other pandemic-related consequences evaporate. Are you pushing back on that? Do you think that the inflation rate now is substantially higher going forward than it was in 2019?
I think that back in 2019, the predominant question that the central banks were thinking is how do we get inflation up to 2%? And now it's how do we get it down to 2% and keep it there? But you know what? Central banks are giving us something that we rarely see in economics. You've got the Bank of Japan, which still has negative interest rates and a very easy monetary policy, versus the Bank of Canada later today, versus the Fed, versus the ECB, versus the Bank of England, who have a much tighter policy. So we'll see. If it's all about supply chains, then inflation is going to come down in Japan. I suspect that's not the case. Japan's had upward pressure on inflation, and they may well continue to have upward pressure on inflation until they take action. You know, it's an odd world where one or two words here or there, while still having negative interest rates, is considered hawkish, which was the interpretation of yesterday's BOJ meeting. Inflation ultimately is about monetary policy. It's one of those principles of economics I fundamentally believe in, that inflation is a monetary phenomenon. That doesn't mean to say, the cost shocks and so on are unimportant, but that doesn't become inflation if the central bank pushes back on it. And look, 2021 was a disaster. Zero rates, buying $120 billion of bonds a month. While inflation was picking up, the Federal Reserve unleashed the inflation genie. And they had to do something else in 4 consecutive three-quarter-point rate hikes in the mid to late 2022 to push that back in. It was hard fought. We haven't had the recession yet. They've done very well getting away with it. They don't want to throw in the towel. With the stock market essentially the record, where's the cost of current interest rates? But if the Fed were to cut aggressively and then find, oh no, we made a mistake, inflation has not gone back into the bottle, hasn't stayed in the bottle, and they have to start hiking again. That's the scenario they want to avoid.
The risk cuts both ways. John, it's good to see you, as always. The brilliant John Riding of Bring Capital. 21 was a disaster. Will 2024 be a disaster? And I'm with John, most people are. December was a messy meeting from Chairman Powell. It's difficult to find the consensus that he was seemingly reflecting in that committee meeting, in that news conference, in the minutes that came out later on. Where were those comments?
He unleashed animal spirits, some people could argue. And now the question is, how do you put that back? Do they start to get more aggressive to really gut check the market's enthusiasm?
When the New York Fed president has to come out 48 hours later and correct things.
It didn't work.
And it didn't work. Something's gone wrong. Coming up in the next hour, IBM Vice Chair Gary Cohn, Kathy Jones of Charles Schwab, plus the latest from New Hampshire, from New York City. Good morning.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Julie Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park, and that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that.
Don't miss Bloomberg's interview with the
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Everyone believes that the next move by the Fed is a cut, which means people can start planning for that.
This isn't recession, cut early, cut fast, cut deep. This is move gradually and methodically.
What matters is the end point. How much are they cutting? What is the reason that they're cutting? I would argue the market's pricing in these rate cuts.
You can deliver what's priced into the curve or even less and still have yields just fairly stable.
People are just ready to throw in the towel that, it's time for cuts, let's move on. And what we've seen this month is people capitulating a little bit.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance alongside Lisa Abramowitz. Together with Anne-Marie Hordern, I'm Jonathan Ferro. Your equity market on the S&P 500 positive by 0.4%. 4 days of gains on the S&P. The longest daily winning streak of the year so far. 3 consecutive all-time highs. And juicing things just a little bit this morning. Netflix, Bramo, knocking it out of the park.
Honestly, the rally that we've seen so far in the record highs entirely driven by big tech. Magnificent Seven. We just saw the biggest 2-week inflows into tech-related stock funds going back to August. At a certain point, they're the ones delivering. They're the ones supporting a lot of the earnings. How long will it take before everything else catches up?
The stock is up by 10%. Lisa, go through some of the headlines. Best quarter for sub-growth since the pandemic. Beating projections in every single region of the world. Yeah, the tally that Wall Street was expecting was 8.9 million. They got 13.1 million new customers for the last 3 months of 2023. Again, this is after everybody signed up during the pandemic because they were tortured with their children trying to figure out what to do with them. I'm just saying theoretically. So the fact that you could get this, nothing at all. But this to me indicates the incredible growth. Are they taking over for someone else? Or are they just simply capitalizing on people's need for entertainment? Upside surprise for Netflix. Positive surprise if you're a fan of Donald Trump. Another big win. AMH for the former president after another big win before in Iowa.
That's right. He has back-to-back wins now. Iowa, New Hampshire. I will say the margin he won wasn't as big as they expected. So in that sense, Nikki Haley did do somewhat well, given she was up against this massive lead in the polls. But it does look like he's just consolidating. And if you look ahead to South Carolina, it's 30, 40 points that he is up in some of these local polls, and that is her home state. We keep talking about 2 questions. Why is Nikki Haley still in the race, right? What does she hope to accomplish? Is she just waiting for Donald Trump to have to bow out for some potential reason? And then the other question that I really have is where are independents going to go? And you really went to this earlier, but they seem to be migrating away from Trump a little bit more than they did in 2016.
More on that in about 10 minutes' time. Let's get you up to speed on the broader price action. Equity futures on the S&P 500 positive here by 0.4%. Bond yield to lower by 2 basis points, 4.1070 on a 10-year in America. Over in Japan, the JGB market selling off just a touch. Yields higher. We're talking about rate cuts at the Fed, maybe rate hikes at the BOJ.
It's not a market. I'm sorry. Let's see what happens.
Hasn't been for a long, long time.
Right. So what happens when they actually start trading? I mean, how much of the JGB market is owned by the Central Bank of Japan, the Bank of Japan?
Something like half.
Yeah, so I mean, honestly, at a certain point, okay, but they are moving in a different direction. And does the U.S. potentially cutting rates open the door for them to do it further?
Yields up in Japan by something like 5 basis points. If you don't follow the JGB market,
it's okay.
Use the term market loosely, 5 basis points is something, let me tell you. Coming up in the next hour or so, Gary Cohn, the IBM Vice Chairman and former National Economic Council Director, joining us around a table in just a few moments. Bloomberg's Katie Lyons in New Hampshire as the former president takes another step towards the GOP nomination, and Michael Nathanson of MoffettNathanson on Netflix's blockbuster quarter. That stock is up by more than 10%. We begin with our top story. 1 week out from the first Fed decision of the year, a string of stronger than expected data leaving economists split on the timing of rate cuts. Neil Dutter of Renaissance Macro writing, quote, inflation is slowly, relatively quickly moving back towards target. Labour markets are slowing, but they're not slowing as quickly. The net effect of that is going to continue to juice real incomes. It's not an economy firing on all cylinders, but it's an economy firing on enough cylinders. With us around the table, I'm pleased to say, Gary Cohn. Morning, Gary.
Good morning, John. Thanks for having me.
I was reflecting on our conversations we used to have many years ago when you were in front of the White House, and you used this term, the threes. Are we going back to the threes? Is that what you think we're going back to?
It feels like we're going back to the threes. You know, in the threes, for those that don't remember me standing in front of the White House talking about the threes, I was talking about 3% GDP, 3% unemployment, and 3% wage growth. That was sort of the sweet spot that we were trying to achieve at the time. And we thought that was a really good, solid place for the United States economy to be. And that was sort of the goal. That was sort of the middle of the target that we were trying to hit, you know, month after month as we were talking on those Fridays after we released job data.
What I've noticed from you is that we seem to have forgotten what normal is.
Well, we totally forgot what normal is.
You've been around for a long time. You've seen many cycles. What is normal?
So this is a campaign I'm on in many respects that we have forgot what normal is. So to go back to what normal is, we have to go back to the post-2008 financial crisis. Because since 2008, you know, the Fed has been the overwhelming dominant feature of financial markets. So prior to 2008, you know, Fed meetings were important, but we didn't live and die off Fed meetings. In fact, I'm old enough to remember when money supply was what drove markets. Now, I'm really dating myself on money supply there. But then we get to 2008, and the Fed goes into the whole policy of zero interest rates and quantitative easing. Followed by many other central banks around the world. And as the Fed goes into the zero interest rate policy and they continue to build a bigger and bigger balance sheet, they become the dominant factor in financial markets, not just in the fixed income markets, not just in the rate markets, but when you literally have zero rates of return, you're literally forcing people out into the risk spectrum. So you bring many other asset classes that have historically not been appealing to people, you bring them into play because the search for return, the search for yield, you go farther out on the risk spectrum. So we lived through the 2008 period all the way up to basically, I would say, COVID, with this zero interest rate policy, people looking for alternative assets, looking for yield, searching for it in unusual places. We come into the COVID period, and sort of the Fed stays in their zero interest rate policy because they have no idea really what's happening. I'm not sure that that's a mistake. You know, when you don't know what's happening, don't make a change. And then all of a sudden we get into we'll call it the Biden administration. And we've gone through 5 stimulus packages in the United States, and all of a sudden we've got U.S. consumers with the best balance sheet they've had in their life, enormous amount of disposable income, the ability to finally go out and spend it after not having the ability for almost 2 years to spend anything that, like I said, you can't buy it at the grocery store, FedEx or UPS or the United States Mail Service can't deliver to you, you can't buy it. We now have the ability to go out and spend that money. And lo and behold, we end up in a highly inflationary cycle. So the Fed goes from this zero interest rate, trying to drive economic growth, trying to drive inflation. And I always remind my best friends, you know, if you would have picked up any newspaper prior to 2000, in that 2008 to 2020 period, the Fed headline would have been, can the Fed ever create inflation again? So now we're back in this highly inflated period, and the Fed goes from, you know, quantitative easing to quantitative tightening to zero interest rate policies to 50 basis points sort of month in and month out. So we have been through this 15-plus year cycle of what I would call abnormal. On top of that, we end up with this inverted yield curve because everyone's convinced the Fed's raising rates. The Fed has to slow down the economy. We have to see job degradation. So we have to go into recession. I think the missing component there was how strong personal balance sheets were. So we don't go into recession. We still have an inverted yield curve, which I don't think is normal. So I think now, for the first time in this 15-year period, we're getting to a position where we're starting, and we're just at the very beginning of heading back towards normal and what normal would be. And so reminding people a little bit what normal looks like, it's going back to the 3-3-3. But historically, we have a positively shaped yield curve in the United States. We have a risk premium. Historically, if you look at 10-year yields, the 10-year average yield in the United States, you can either put in the Volcker Fed or you can take out the Volcker Fed. With the Volcker Fed, it's 4.6%. Without, it's 4.3%.
If you put aside all of this, right, if you take a look at the Fed and say, okay, it's on the back table, you start to look at the economy, it looks pretty good. It doesn't look like we're going into recession.
Agreed.
Why do people feel so bad?
Here's why people feel bad. Like, the inflation number and the inflation data is the most peculiar data we have in the United States. We count inflation either month over month or year over year. We don't zero baseline it anywhere. And so when we talk about inflation, we say, how much inflation do we have over last month? And if we had inflation month over month, it means what you paid last month is here, and what you're paying this month is higher. If we have inflation year over year, it's the same thing. So we've seen the compounding effect of a 3% inflation year, a 9% inflation year, a 3%, all that adds up to 20+%. So when you're a consumer today, you're a hardworking consumer today, your basket of groceries is 20+% more than you think it should be worth and what it was worth 2 years ago. So the compounding effect of inflation, because we don't have a zero baseline basket, is really what's affecting people's mentality. The second part of the equation is people are working harder. They're working more jobs to be able to buy what they want to buy. The savings from the pandemic is gone. It's not all gone. There's still a lot of it sitting in Treasury and money market. But if you look at the financial position of many Americans that went from high consumer debt going into the pandemic, then they went from consumer debt being wiped out, they went to high savings rate because they were sort of forced in. They've actually spent all that money back. They're back to where they started. They're back at consumer debt. So they do care a lot about the inflation, and they care about their purchasing power. And we are talking about wages today exceeding inflation. But that's on a sort of spot market basis. We haven't talked about it over a 1 year or a 2 year basis.
I got to say, I wonder how messy the data is as well. And if you were still the head of the Economic Council advising the president, how would you communicate the idea that we're seeing churn, massive churn in response to technological advancements? I'm thinking about eBay laying off 9% of its staff because it needs to upgrade certain things, or SAP in Germany. You're seeing this again and again. How much is that featuring into the messiness of the data?
We always have messy data. We're always, we never really get totally clean data. We could talk about all the revisions to the unemployment data. It's a survey data, and then they go and revise the data from a month and 2 months ago. And sometimes the revisions are bigger than the actual data. But we of course fixate on the data on that Friday, and then a month later we say, oh, that data was completely wrong. So if you're in the world of looking for the clean, pure answer, our economic data doesn't give you really clean, pure answers on a real-time basis. If you look at the data over a cycle and over a period, it gets very clean over time. I think you've got to look at the data on a longer period of trend. That's why a lot of people, like I look at the JOLTS report. I think JOLTS is really interesting to me because it shows job openings, amount of people looking. But what's in there, there's some really interesting numbers in there. It shows you how many people quit their job. Quits to me is one of the important numbers. People only quit their job when they feel like there's a better job out there. So it's a pure measure of what people's psychology on the market is. When the quit rate goes up, it means I believe I can get a better job, better paying, better quality of life, and I'm not worried about quitting. When the quit rate goes down, people are saying, okay, the job market's not very good. I should be happy with the job I have. I don't love it, but I should be happy with the job I have. So there's data out there. If you put it all together, I think you can create a pretty clean picture for yourself.
Unlike this administration, Gary would actually communicate, Bramo. That would be the answer to that, but we won't get into that now. Gary Cohn is going to stick with us. Let's get you an update on some of the stories elsewhere this morning. Here's your Bloomberg Brief with Yahari Jackets.
Hi, John. Donald Trump is marching towards a November rematch with Joe Biden. After the former president comfortably won the New Hampshire primary, Trump beat his only remaining challenger in the GOP race, Nikki Haley, with the former UN ambassador refusing to back out of the race. Netflix is surging this morning after posting its biggest subscriber gain since early in the pandemic. The streaming service's decision to crack down on password sharing and introduce a cheaper ad-supported version paying off, with more than 13 million customers signing up in the last quarter. And Tesla telling suppliers it wants to start production of a new mass-market EV midway through next year. That's according to Reuters. Currently, Tesla's cheapest car starts at almost $40,000, but this reported model would start well short of that. The company will report earnings later today, with the stock down more than 15% to start the year. And that's your Bloomberg Brief. John?
Yahara, thank you. Equities right now on the S&P 500 positive by 0.4%. Up next on the program, Nikki Haley vowing to press on.
This race is far over. There are dozens of states left to go.
That's coming up next on the program. You're watching Bloomberg Surveillance live from New York City. Good morning.
Studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
DOJ or other authorities
Could face bigger challenges next.
Fed was going to keep rating World Cup. This is a three
As the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
4-day winning streak on the S&P 500 about to become 5 based on this move this morning, up by about 0.4% on the S&P. Yields coming in lower by about 2 basis points, 4.11% on a US 10-year. Under surveillance this morning, Nikki Haley vowing to press on despite her loss in New Hampshire.
This race is far from over. There are dozens of states left to go. And the next one is my sweet state of South Carolina.
Here's the latest this morning. Donald Trump defeating his only remaining rival in the GOP race. Trump's victory putting him squarely in the driver's seat. No Republican has failed to secure the nomination after winning the first 2 states. The former president now set to deliver the knockout blow, AMH, on Haley's home turf.
Yeah, the polls look really complicated for her in her home turf of South Carolina. The Wall Street Journal this morning, Jonathan, giving some advice, let's say, to Nikki Haley. They say she has an opening to take on Mr. Trump for his proposed 10% universal border tax. She can point to his failures against China, his coddling of dictators, his failure to boost defense, much while adding almost as much to the national debt as President Biden. But she also needs to grab a specific cause or two, perhaps school choice and parental rights, and make them hers. Can she do it? This is the problem. There's a huge machine now behind the former president.
Let's get to Kelly Lights on the ground in Manchester, New Hampshire. Great to catch up, Kaylee. Let's do this all over again. Nikki Haley, does she make it to South Carolina? based on what we saw last night?
Well, she says she will, Jonathan. Of course, she and her powerful surrogates like Governor Chris Sununu here in New Hampshire had said all she needed was a strong second place. They didn't, though, define exactly what strong is, and arguably an 11-point gap between her and Trump, who won last night, isn't necessarily a strong showing. That said, she still vowed to continue on. 4 weeks from now, on February 24th, is that primary. The difficulty she's going to have is that if she couldn't perform that well in New Hampshire, even with the large base of moderate Republicans and independents here, it's very difficult to see how she could perform better in a future contest like South Carolina, where the base is significantly more conservative. The MAGA base is very strong there, and that could be potentially weaponized against her moving forward. The attacks could sharpen. So that is why many people this morning are saying essentially that the general election has now begun. Now, what we're heading for is a rematch between former President Trump and President Biden, a development that the Biden campaign is welcoming, as they believe that he could beat Trump once again, as he did in 2020, but frankly, a development that many Americans don't want. Polls show 70% would not like either man to be president a second time around, and yet it looks likely this morning that that is exactly what they're going to get.
This is now going to paint so many of the political stories, especially what's happening in Washington, D.C. If Trump is now basically almost coronated as the Republican nomination, what does this mean for a border deal? Because that would give a huge win to the sitting President Biden ahead of a key election.
Yeah, that's exactly right, Anne Marie. Obviously, Biden is currently actively negotiating with Senate leaders to get a border deal done. And the question is going to be whether or not that can pass in the House, when Speaker Mike Johnson has a very close relationship with Donald Trump, as does the vast majority of Republican leadership. All of them have lined up to endorse the former president. And Trump has said that they should only accept a perfect border deal. Could he exert pressure to make sure it doesn't get over the finish line and be politically advantageous to his opponent, Joe Biden? One thing I will say, though, guys, as we talk about all of this very likely general election rematch between two individuals, keep in mind that the group No Labels has said they would run a unity ticket if by Super Tuesday it looked like what it was going to be was a Trump-Biden race. So just watch for that. Someone like Larry Hogan or Joe Manchin, of course, the senator from West Virginia, who is no longer going to be running for re-election to that seat, to see if someone else, a third party, could come into the picture here, because there's a long way to go until November. This is going to be the longest general election in modern political history.
Hey, Kayleigh, already feels like a year long already. Katie Lyons, thank you, over in New Hampshire. With us around the table for some final thoughts, Gary Cohn. Gary, I know you don't want to talk about the horse race. We won't do that, but I do want to talk about policy. Sure. Tax cuts, tariffs. Let's start with tax cuts. Hardly been talked about. You and I caught up yesterday, and I have to say, I haven't talked about the tax cuts and all the money that's started to come back into the country for the best part of 6 years or something like that. How relevant are yesterday's tax cuts to today's economy?
Well, they're the 2017 tax cuts. And I think they're really important. So this is back on the theme of normalization. So since we really got the tax cuts through that were signed December 22nd of 2017, we sort of had 18, 19, we had sort of two normalized years. 18 was sort of an implementation year. And we saw some really amazing things start happening. We saw real repatriation of foreign overseas money. We saw $1.5 trillion come back in the United States, because in the old tax system, corporations could leave their money offshore and they didn't have to pay U.S. taxes, so they brought it back. We deemed that money to have brought back, so we taxed it. It got brought back. I think when you see what's going on, there's the manufacturing boom in the United States right now, which started in that period of time. A lot of that has to do with this repatriated money. Historically, when companies couldn't bring their money back, they had to invest it overseas. They built manufacturing overseas. They invested in property, plant, and equipment. Now that they're being taxed, no matter whether they bring it back or not, they're bringing it back, they're paying the tax, and they're investing. So you've seen the creation of manufacturing in the United States. This started in 2018 and 19 as companies started bringing back their repatriated money. You've also seen the growth that we've seen in consumption. You've seen the growth in the middle class's ability to spend money. Hardworking individuals got a real tax cut. And that's why I think people have missed the economic picture in the United States so badly. Everyone calling for this recession over the last year and a half, I don't think they understood the additional consumptive powers that the tax cuts created. We put real additional disposable income into people's pockets. And we did it on purpose. We made some very conscientious decisions to make sure that we were delivering real taxable returns or less tax to the hardest working individuals in America. And it takes time for that to feed through the system. It doesn't happen year one. And then we go through COVID, so you get all of these, unnatural phenomena. And now we're back to what I say is more normal behavior. People are understanding what their taxable income is. Some of the programs that we put in 2017 have expired. And I'm happy to say that we're seeing some bipartisan legislation to reinstate some of those programs. There's a bill going through the House right now to reinstate some of the child tax credits, along with accelerated depreciation and the write-off of R&D credits. We think both sides of that equation, they were in the original tax bill. We think they're both important. You're taking care of both sides of the equation. We have to take care of hardworking families with children, and we have to incentivize companies to continue to do R&D and continue to invest in the country.
Gary, those individual tax cuts from 2017 are set to be expired. As you say, that helps individuals in taxes, but if you have a 10% tariff wall around the United States, that's a massive tax on consumers.
It is. So look, the tariff wall is something that needs to be discussed. I know it's a potential that's being discussed out there, and it's an idea. It's something that's being used to potentially pay for the future tax plans.
Wouldn't it negate it?
Look, I think we shouldn't get too far ahead of ourselves right now. As you said, the personal side of the tax reform package terminates in 2025. There will be enormous amount of discussion to what happens between now and 2025. It will be important to what the makeup of Congress looks like, to what you are able to do, what you're not willing to do. Are you going to be able to do this through reconciliation? Are you going to be able to do it through normal order? Are you going to be able to do it with a simple majority? To do that, that means the Republicans would have to control the House, the Senate, and the White House. If you've got a split Congress, or maybe the Democrats control all three. If you're doing it through reconciliation, you're going to be able to do it through one set of policies. If you do it through regular order, you're going to have a much more of a compromise on what goes on here. So I think that the ideas that are being talked about right now are concepts. And this is what's interesting about the electoral process in the United States. And I think this is why it's important. This is a time where potential candidates and incumbents, and we actually have a couple of incumbents running, they get to tell us about their ideas of how they want to run the government. And these are ideas. If you look at the history, there are concepts and they're starting places. They're not necessarily ending places.
Bremo's got thoughts. I know Anlita's got thoughts.
Well, no, to me, the idea, so many people have come on and said, we're taking it seriously. If Trump says something, we're taking it seriously. And Gary Cohn is saying, maybe not. You got to look at the whole process. Unfortunately, we're out of time, but we'll have to get you back to talk about that.
Hey, Gary, it's good to see you. Thanks for this morning. Thank you, sir. Gary Cohn. Coming up next on the program, Netflix shares surging in the pre-market after reporting some stellar numbers. Those numbers up next.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg. Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question its industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Stocks are positive by 0.4% on the S&P 500. On the NASDAQ 100, all-time highs at a close yesterday, up by another 0.7%, helped out by the earnings. Netflix looking better than good. In the bond market, 2-year, 10-year, 30-year, believe it or not, a week away from a Federal Reserve decision. Yields are lower by a couple of basis points. Bramo 410.89.
And really, it's a matter of how much they push back against some of the enthusiasm that we've seen in risk assets, given the fact that we're still seeing about a 50% chance of a March rate cut being priced into markets. To me, that's one key question at a time where you're already seeing it priced in, and frankly, risk to the races led by big tech that's delivering on the earnings.
Don't want to geek out too much, but how much have you heard about inflation revisions? This conversation started yesterday with Priya Misra of JP Morgan. Morgan Stanley's Ellen Zentner wrote about this as well. Policymakers would do well to defer judgment on inflation and the timing of the first rate cut until after the February CPI revisions. That's the focus of Ellen and a lot of other people too.
People think that the data was messy because of some of the year-over-year and holiday types of comps. I will just say this. The longer this sort of rate-cutting parlor game continues, the more you're seeing long-term inflation expectations tick up. I'm looking right now, if you look at the forward break-even contracts, not to geek out too much, but 2.4%, down from a low recently of 2.1%. So it gives you a sense of how much people are really gaming out longer inflation, higher inflation for longer.
That's the next month or so. Let's finish on foreign exchange. The euro just south of 109 against the dollar, 108.89. Positive, though, on the session by 0.3%. Under surveillance this morning, Donald Trump taking another step towards a rematch with Joe Biden, the former president winning the New Hampshire primary, comfortably beating his only remaining challenger in the GOP race, Nikki Haley, refusing to back out. The next primary is in her home state of South Carolina next month. And AMH, the polls do not look good.
They don't look good. Also, look at the endorsements in South Carolina. One member of Congress at this moment, Ralph Norman, the only Republican member of Congress to back her in South Carolina. You have Senator Tim Scott. You have the governor of South Carolina. They're all going to coalesce around Trump. So the pressure is really going to mount on her and her campaign.
Kind of shocking that Tim Scott ends up backing the former president when it was Nikki Haley that helped put him there.
And also the optics of last night. He was just behind the former president, shining as he dropped out, and you're 100% right. Nikki Haley appointed him.
Yeah, the fact also, I mean, just everyone coalescing around Donald Trump. I just think about what this means for passing any kind of budget deal, what this means for any kind of border deal, what this means for anything, because anything that gives Biden a win is going to be negative for all intents and purposes, the leader of the Republican Party.
And what it means for foreign policy issues as well. Check out this. The U.S. striking Iran-backed militia in Iraq after the group attacked an airbase housing American troops. Defense Secretary Lloyd Austin saying it came in response to a, quote, series of escalatory attacks against U.S. personnel in Iraq and Syria. The U.S. also conducting further attacks on Houthi rebels, striking 2 anti-ship missiles in the Red Sea. These two stories are connected. the election race of the next 10 months, 11 months, and what's developing in the Middle East?
Yeah, absolutely. So foreign policy become a little bit more important. What the administration wants to do is they don't want to see this conflict expand in the Middle East. So what they are doing is this laddered approach, very much in line with U.S. policy. They're going after training facilities, and they're going after the housing of missiles and all these weaponry that these Iranian-backed militia can use against the U.S. and the ships.
We've been talking about escalation about 3-4 months ago. Is this an escalation, or is this basically, for all intents and purposes, it has become a war, just sort of a low-grade war that is a hot war between the U.S. and Iranian proxies? And you can see that. Now the question is what this is going to do to Iraq, whether they're going to ask to pull out some of the U.S. troops that have been there. I mean, how much they really push back. And it really does feed into some of the election narratives.
Essentially in two proxy wars.
Yeah,
One with Russia, the other with Iran.
Absolutely. And what I think you'll probably see from the Trump campaign to really want to step up is that they decided to go for a big strike target when it came to going after Iran, and that was Qasem Soleimani. And reporting we have following that was that actually through intermediaries, individuals went via the Swiss and others, kind of frantically going to the U.S. after Qasem Soleimani was taken out, that we're done. We want to stop, and we want no longer of this bloodshed in the region.
Let's finish on this story right here. ASML seeing orders for its semiconductors more than triple in the last quarter. The CEO of Europe's most valuable tech company telling Bloomberg's Tom McKenzie the semiconductor industry has now bottomed.
We see the first positive signs of recovery. So at the beginning of the year, we'd much rather be a bit conservative. But as you also saw, had a record quarterly order intake, which also bodes well for 2025 and perhaps the back half of 2024.
So to be clear, this semiconductor market has now bottomed.
That's what we believe. We see the positive signs.
It's the latest sign of a resurgence in the industry. TSMC earlier projecting strong revenue growth in 2024. I have to clarify here that we're talking about a company that produces equipment needed to make the most sophisticated chips on the planet. Huge demand out of China for good reason, and I wonder what that demand is going to look like, or rather their ability to supply it in the years to come.
Especially if some of these sanctions and things go into play, and whether they're sort of front-loading some of that, given some of the increasing geopolitical risk. But frankly, we've heard from Qualcomm as well as other executives from Intel and beyond saying that this is only going to increase the race in China to develop their own chip, and it will hamper their ability to compete. So we shall see exactly how this develops.
Yeah, ASML seems to be benefiting from this race to hoard a lot of this technology before potentially more of these penalties come online. But at what point does that become beneficial, or how much does AI actually outweigh it? Because you also need this technology if you want to build out AI technology.
That stock is up in European traded by something like 7%. Elsewhere, Netflix absolutely soaring in the pre-market following a blockbuster earnings report. The streaming giant winning more than 13 million new customers in the last quarter, the best gain since the start of the pandemic. The jump coming as the company introduces a cheaper ad-supported platform and cracks down on password sharing.
We're really thrilled with our engagement trends domestically and globally. Our engagement is a bit impacted by our paid sharing. Think about it like fewer households using the same account. So as those folks spin off and get their own accounts and we win them over with our programming, that will normalize and continue to grow.
Michael Nathanson joins us now, Senior Research Analyst at MoffettNathanson. Mike, it's always good to hear from you, sir. Netflix just getting it done. Better than good. Walk me through where the revenue growth comes from now. Is it higher subs or higher prices?
Okay, good morning. It's probably a mix of both, right? So on the sub front, they have a lot of room to grow in developing markets, Latin America, and Asia Pacific. On the revenue side, on the ARPU side, they are still introducing this advertising tier, and they're rolling that out at a lower price. So over time, they'll grow advertising. So they have a steady mix of going forward, volume and price, and you're probably looking at like an 8 to 10% top line growth over the next few years because of that.
Michael, do you expect consolidation that Netflix is involved in? And I asked this after we were speaking earlier with Chris Marangi about just how much there's going to have to be this kind of tie-up cycle within media.
Yeah, it's a good question. Netflix won't participate in that tie-up cycle. Their competitors have never been weaker. The competitors, meaning the people who own cable networks, WB, Warner Brothers Discovery, Paramount, have to do something. The wild card here is Comcast. Comcast has Peacock, as you know, we talked about it last week, but Peacock is still not fully scaled. So there has to be some type of streaming consolidation and linear network consolidation. And I don't know how that gets done in the near term, but Netflix will not be part of that. They made that clear yesterday.
How much is Netflix independent in being able to crack down on password sharing versus kind of a shining light for the rest of the industry to be able to crack down HBO, Beyond, Peacock, et cetera, and capitalize on the eyeballs that might not be paying the bill?
Yeah, it's a really interesting topic. Netflix has been the first down this path because they hit maturity the first, and they also didn't really care about password sharing in the beginning. I don't think the others have the same opportunity because they don't have as much volume in programming. They probably haven't done as much password sharing. We don't know. Netflix has quantified about 100 million homes that are password sharers. They have not yet told us how many of the 100 million have been converted. At this point, they probably don't know because it's all been mixed together. But I don't think the others have the same opportunity because they're still growing their business and they don't have the volume yet. So it's a real challenge for everyone else to actually play the same game that Netflix is playing. They're on a different plane in terms of what they're able to do right now.
Michael, when we caught up with Gabelli Funds, Chris Morangi, in the last hour, he was talking up consolidation in the industry. Where do you see consolidation coming from and who between?
It has to be some combination of Warner's, Paramount, and NBC Universal. Disney's Disney's not going to do any more deals. Netflix is fine. I don't really think Amazon and Apple are going to move here and buy other assets. So to me, it's the legacy media companies have to find cost synergies, have to get streaming scale. So Jonathan, it has to be the people who are just wounded now by cord cutting and the rise of Netflix, right? And again, because of either personalities or regulatory pressures or just kind of the unwillingness to come together, I don't think it's necessarily going to happen this year. So to me, this is just going to be more of the same for 2024.
Michael, I want to dig into that. Are you saying that the egos, as some of these companies are so large, they won't consolidate until they're forced to? So ultimately, you might have to see more pain first?
Oh, with that, thank you for saying that more articulately than I did. Yes, exactly. That's what's going on here. Is that you have to recognize you have a problem now. Someone is going to have to go to one of their competitors on their knees and say, hey, let's find a way to work together. And I don't think the people who run these companies want to do that yet.
So with that in mind, what is there to like about this sector? What is the top pick?
Well, I said this a couple of weeks ago. Our favorite stock idea is shorting Roku, but that's not for a lot of our people listening. So our favorite call is like we have a short call on Roku just because we think lessening competition in streaming is not good for Roku. But we also have a buy on Disney with the idea that Disney has to articulate a profit story in streaming in 2024. They've been vague about their long-term profitability. Netflix will be at 24% profit margins this year, and Disney will be maybe break even by the end of the fourth quarter. So we say Disney in media, and it's really about their articulation of profitability. And hopefully in the first half of this year, we'll get more information on where they see their business kind of heading towards in profitability.
Michael, thanks for the insight. It's always good to hear from you. Michael Nathanson there of MoffettNathanson. I think the best idea tells you everything that MoffettNathanson thinks about that space right now.
It's a short bet. That is all you can say. He laughed and then said, well, actually, it's shorting Roku because that's probably going to lose. And a really unenthusiastic explanation for Disney. But this really highlights the, lack of conviction if the ego is going to get in the way of trades that might make sense.
I won't start saying who's got the biggest ego in that space. No, I won't. But ultimately, that's never good, is it? That things have to get worse before they get better for leadership to concede that something needs to be done.
Because they have to agree to a price that they don't like. And that's the bottom line. And that's the reason why people have been surprised by how slow this process has been that everyone has expected for quite a while.
A lot of people like Netflix this morning. That stock is up by something like 10%. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg brief with Yahara. Hey, Yahara.
Hi, John. AT&T has delivered a strong fourth quarter with its wireless and broadband businesses growing at a faster pace for the second consecutive quarter. The telecom provider has been in a tough stretch of slow growth and job cuts. CEO John Stankey had embarked on a ruthless cost-cutting campaign that includes office closures and slowing investment into 5G and home internet. Apple is dialing back its auto ambitions after a decade-long effort to build a car. Bloomberg has learned the firm is now looking at an electric vehicle with more limited features, pivoting from its plans to make the vehicle driverless. The target release date for an Apple car has also been pushed back to 2028 at the earliest. And tech layoffs continue. German software company SAP plans for an 8,000 job restructuring to build out AI, while eBay will cut 1,000 jobs. That's 9% of its full-time workforce. It's the second round of reductions at eBay in a year. 60 other tech companies, including Amazon and Alphabet, have let almost 11,000 employees go so far this year, according to layoffs.fyi. And that's your Bloomberg Brief. John?
Yahara, thank you. We'll catch up with you in the next hour. Up next on the program, it is the year of the landing.
The market is pricing in very low chance of a hard landing. 35%, 40% chance of hard landing, I think is still there.
That's next on the program. You're watching Bloomberg Surveillance.
Warren Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
You later got asked to be the head of USAID.
I got that job when I was 36 years old.
36 years old. You're running USAID. How many employees does it have?
We had 11,000.
And did you feel qualified to run something that big?
I did until, the work started.
The grind higher continues on the S&P 500, positive here by 0.4%. Into the bond market, yields lower by 2 basis points, 410.31. And foreign exchange, the euro a touch stronger here, 108.96 against the dollar. That currency pair positive by 0.4%. Under surveillance this morning, it is the year of the landing.
The market is pricing in very low chance of a hard landing. 35%, 40% chance of hard landing, I think is still there. Because when you look at the details of the data, it's not all that robust. There is a chance that things slow down, or the Fed doesn't cut fast enough, or they continue QT long enough. And that's when that chance of something going wrong, I think we always have to be positioned for that.
Lisa Rasfel, very specific numbers, percentages of hard landing, soft landing. The Fed waiting another round of reading on the economy with the PCE deflator on Friday. Michael Gapin of Bank of America expecting a March rate cut, saying, quote, what gets them to cut in March is the inflation data. Even if the activity side of the economy is doing well, it's the deceleration in inflation. As we roll into the March meeting, I think they get gradually more confident, Lisa, about the trajectory.
And you know who agrees with Michael Gapin? It seems like Jim Bullard, the former president of the St. Louis Fed, because yesterday in a Wall Street Journal interview, he was saying
He expects the Fed to lower rates before we get to that 2% target in inflation, and that cuts could come as soon as March. He wrote this: inflation on a 12-month core basis, you could get to 2% by the third quarter of this year. This is tricky because the Fed doesn't want to get into the second half of 2024 and inflation's already at 2% and you still haven't moved the policy. That would be too late. That was his verbs. So suddenly he's a dove after being a hawk and then having been a dove.
Remember, his was the dot right at the very bottom of the dot plot for all those years.
And then at the very top of the dot plot.
I just love hearing from ex-Fed officials because at least they're open and honest about how they actually feel and not guarded.
And you get the feeling that they're paving a path for the March rate cut, even if some people are worried that that's just going to unleash yet another round of
And of course, when you're a former Fed official, you don't have to worry about shaking up market expectations.
Well, you can do it anyway, but yeah, exactly.
You know, you're not going to move markets like you used to.
You're not going to move markets, and you're not going to hear anything from your colleagues in the
it's
next
another way
meeting.
of saying you're less relevant, but that's not what I mean. Kathy Jones joins us now, Chief Fixed Income Strategist at Charge 12. Kathy, good to see you.
Nice to see you.
Michael Gapen's saying rate cut. He was on this program in the last 24 hours saying rate cut in March. Do you still think that's too soon?
You know, it isn't what I think the Fed ought to do. It's what I think the Fed will do, and all the communication keeps pushing us back to maybe May. So we have priced in, we have penciled in a May start to the rate cuts. And one of the reasons is in March, they still need to address the balance sheet, which we know is a topic. So we've heard from Lori Logan about tapering QT. I think that that's likely to happen at the March meeting. We have the expiration of the Bank Term Funding Program, although that can go for another year. So there's a few things in the way, and they also need that level of confidence that inflation is actually going to stay down. And I think that all pushes us more towards May than towards March.
But you think that there's a high chance that they could do it in March, even if they shouldn't necessarily do it, according to you. Where does that leave you? I mean, are you with Priya Misra leaning into riskier credit because it seems like the Fed's going to do everything they can to prioritize a soft landing, even over potentially making sure that the beast of inflation has been killed?
No, we're not leaning into credit. In fact, we're leaning the other direction just because the valuation. Now, you can't trade on valuation all the time, but the spreads are so tight. You might as well be in Treasuries at this stage of the game when it comes to investment-grade credit. Even high yield, you know, spreads are so low. Yeah, you can earn the coupon. You probably have a decent year, so we're still neutral, but we'd definitely not be leaning in at this stage of the game.
So where are you leaning in terms of Treasuries? I mean, does this give you incredible conviction that we're going to get to a 3.5% 10-year, 3% 10-year within the next couple of months?
Next couple of months is pretty aggressive, but I do think we get back, you know, towards the 3.5% towards the end of the year. So we think the main thing is going to be bull steepening. As the Fed does start to cut, you know, 10-year, 7-year probably hang in there in a range. We have fair value in 10-year around 380, 375. So we're pretty close to it now. Probably get a range around that level, around 4% for a while, but we think the main trend is going to be bull steepening.
Why it's steepening and why we're cutting, I think, is really important. If this is because inflation is coming in, great. And it's not because growth is collapsing, fantastic. Priya Misra on this program yesterday of JP Morgan turning positive on credit. Turning positive on credit because she thinks there's this window right now to be constructive on risk assets because ultimately the Fed can cut because inflation is coming in and we haven't really seen a collapse in economic growth yet. Do you see that window as well to be constructive credit, even with the price of the story being pretty elevated?
Yeah, I think this scenario is realistic. It's just that the market for credit's already priced it in. And so to lean in now is to get aggressive maybe a little bit later than you might want to. Also, we'll start to look at the default rates are picking up. We're not looking at underlying fundamentals for credit getting better. And the spreads are very tight. So what are you going to do with that? You're just going to rely on the Fed to cut rates. That's an interest rate play, not a credit play.
Is that another way of saying that you don't think we've paid the price yet for going from 0 to 550 on Fed funds?
No, I don't. When it comes to credit, I don't think that that's fully priced in. I think we're priced in Fed rate cuts and rescuing the economy and the credit cycle. And I think the jury's still out on that.
How concerned are you about a tick back up in inflation based on how the markets price things and based on what you think the Fed will do, not what they should do?
My feeling is inflation still comes down. You know, I think we're in the camp that says that we're in a declining trend in inflation. I've never been in this camp that says, oh, the last mile is the hardest, or, you know, it's going to stay sticky forever. There's just not a lot of empirical evidence to suggest that's taking place. And you have a very soft global economy too. So we do think inflation is going to come down. And I think the catalyst for the Fed cutting rates is that, you've got real rates now heading towards, levels that are really restrictive. So I think that is going to be the motivation. And if they go in March, that'll probably be the reason why. But I just lean towards May because of the messaging that we're getting.
Tomorrow we get the ECB meeting, and we're talking a lot about the U.S. and U.S. debt. It has been the main game in town for a lot of people. Are you starting to shift gears? We're seeing, for example, in Europe, Italians yields coming in dramatically. We're seeing an incredible rush to risk there. Are you following that?
Yeah, I think that there are some attractive plays in Europe because of the likelihood that the ECB has to go sooner and faster than maybe the U.S., maybe than Fed. So I think there's a play there. We actually kind of leaned into emerging markets as well because a rate cutting cycle in the U.S. is often very good for EM, but you have to be really selective.
Well, let's talk about that selectivity. Even with the clouds over China right now, you've got China, big chunk of that part of the world, which is basically trying to stimulate demand for its own equities by apparently, and according to our report, and considering using money from state-owned enterprises offshore to then buy into the equity market through Hong Kong. Kathy, they're cutting the RRR rate all over again. We've heard this story a million times. What on earth can they do to stimulate demand in that economy?
I think there's some fiscal space there, and they seem to be not using that directly. They're doing it indirectly through the banking system. I'm not really sure why you'd want to relever the stock market rather than use fiscal policy. But I'll tell you, frankly, I don't spend a lot of time worrying about Chinese bonds because we don't.
Can you be constructive EM without spending much time being worried about China?
Yeah, because I think that if China takes any step towards stabilizing their economy and improving things and reducing rates, that's APAC countries should benefit from that, APAC EM, and we're seeing a lot of positive things happen in, say, Mexico. So there's some EM where there's some room for movement.
Lisa, we've talked about this a few times already this week. Engines for growth. US is okay. Europe's not great. China's really struggling. If you think about the global economy as a three-legged stool, two of those pieces aren't looking good at all.
Which is interesting from the fact that maybe the U.S. is truly diverging, and it's because of the tech story, and also because maybe there are other smaller engines that people keep talking about, whether it's Mexico or whether it's India or whether it's some of these other areas. The idea that China is kind of moving away from center stage as they isolate themselves has really been a narrative over the past, say, 18 months.
Hey, Kathy, it's good to see you.
Good to see you.
Thanks for being with us. Kathy Jones at Charles Schwab pushing back against the idea of a rate cut in March. Mike Gapen in the last 24 hours. He thinks we may well get one in a few months' time. In the next hour, we'll have a bunch of conversations with the former House Speaker Kevin McCarthy, David Rubenstein of the Carlyle Group, Andrew Hollenhorst of Citi on when he thinks the Fed's going to cut rates. Mandy Zhu of the CBO is going to join us too. That is in the next hour on Bloomberg Surveillance. Your equity market on the S&P 500 shaping up as follows. Equities look like this. We are positive by 0.4%. Yields are lower by 2 basis points, 4.11 on a 10-year. And in foreign exchange, the euro 108.94, positive by 0.4%. A week away from a Federal Reserve decision. The ECB is coming up tomorrow, and a lot of people still believe the ECB is going before the Federal Reserve. The third hour of Bloomberg Surveillance up next.
If you're losing more than half the electricity you put into electrolysis, is it a viable alternative to some of those fossil fuels?
Yeah. I mean, have you heard of oil? Have you heard of gas? I mean, you convert oil out of the ground, refine it, turn it to diesel, whatever you like, which is going to cook the planet. You've already lost 60 to 70%. I mean, yes, there is a conversion loss from not losing an electron going from wind and solar straight into the grid. That's why it's the lowest cost energy in the world. But there's a conversion loss. Oh my God, a conversion loss. The oil and gas sector, green hydrogen's got a conversion loss. It's like putting lipstick on a pig from the oil and gas sector. They have had a conversion loss since 1810, right? And remember, relative dollars, their dollar per barrel was $1,600. Let's not forget that. That's how they got going. Subsidies, $1,600. Wow, it's better than burning wood. Now the same companies stand in the road of green hydrogen and say, oh my God, it's not as efficient as us. We've only had a 200-year head start. Hundreds of trillions of subsidies, which we've swallowed from taxpayers. They should get none, and they want to do it in 8 or 9 years. You know, who would you back? I back us.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions.
We're in a soft landing right now. We're looking at the data. The data looks strong.
Look at the data. It continues to surprise to the upside.
That even if the activity side of the economy is doing well, as it is, it's really the deceleration in inflation.
It's actually not that easy to get inflation down that quickly. It's going to take more time.
As we get into this year, I think a big stepping back thing is that we're going to see what kind of economy we have.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance alongside Lisa Abramowitz, together with Anne-Marie Hordern. I'm Jonathan Ferro. Your equity market on the S&P 500 positive again after 4 days of gains on the S&P 500, 3 consecutive all-time highs. The data so far in the last week has been good. Retail sales hot, jobless claims lower, consumer confidence picking up, and then we start the earnings for tech. Netflix knocking it out of the park. Bramo, another record high in sight.
This is sort of the kicker to all of the hand-wringing over. Is it a problem? Does it make the market more fragile that the Magnificent Seven has driven so much of the gains that we've seen in U.S. markets? Turns out that's where the profit is, right? I mean, it turns out that essentially they are minting cash. The fact that they added 13.1 million new subscribers, that is the most since the heart of the pandemic. And now people have options like going outside versus during the pandemic when they didn't. And you can see those shares bouncing.
This always feels personal with you. Their stock is up by 9.9% in the pre-market, picking up again. More earnings still to come a little bit later this afternoon. So things are looking good, aren't they? Consumer confidence is picking up. The data seems to be okay. Unemployment's below 4%. Jobless claims sub 200K. AMH, you'd think this was very, very good news for the sitting president of the United States because it feels like it's going to be round 2 against Donald Trump.
Right, so it's good news on the economic front. Potentially the timeline is on their side. We saw that with the Michigan survey. Inflation is coming down. People are starting to potentially feel the economic effects that the Biden administration has been telling them they should be feeling. And the polls have been showing, well, actually, we're not. Now, maybe we're going into November and people are starting to feel better. And then the campaign last night puts out a statement saying, almost eagerly were excited to take on Trump because Biden was the only person who could beat Trump. Now, we should remind everyone, Trump only faced off in a general election against 2 people.
It's kind of bizarre, isn't it, when you put it all together? You've got the president eagerly awaiting another face-off with the former president, Donald Trump. At the same time, Nikki Haley's holding on. Is Nikki Haley going to keep holding on?
Well, the pressure's going to mount on her. And if you look at what she says, her sweet home state of South Carolina, she's behind 30, 40 points at the moment when it comes to former president.
I really think it's fascinating, the economic question, and we asked Gary Cohn in the last hour, why are people feeling bad if the economic data is so good? And I guess it comes down to, and what everyone's saying is just time. People need to adjust to 20% higher grocery bill. So when is sort of the statute of limitations on this? When do we say, okay, now inflation is not year over year, it's month over month and it's okay?
Gary nailed it. Cumulative inflation. It's the pain people feel over a period of time from 2020. It's not month over month, year over year, where we're going this year. It's about what's happened since 2020 and the sticker shock at a price level over the last 4 years. It's not going back.
And this, to me, is really a key question. If anyone has a paper on this, please send it. But what is sort of the maximum amount of time that people have to live with inflation at a certain level before it becomes sort of normal, and their wage increase to outweigh that in a more material way?
Equity futures right now on the S&P 500 positive by 0.5%. Let's whip through the price action for you. Bond yields look like this, down by 2 basis points, 410.51. The euro a little bit stronger, dollar weaker, reclaiming 109. The Fed decision a week away. The ECB decision a day away. Coming up on this program this hour, Mandy Zhu of SIBO Global Markets on the rally in the equity market. Former House Speaker Kevin McCarthy joining us around this table following Trump's victory in New Hampshire. And Citi's Andrew Hollenhorst looking ahead to key inflation data out later this week. We begin with our top story. Stocks continuing to climb. Mandy Zhu of SIBO Global Markets seeing more room to run. Writing, quote, options market positioning is still biased towards further gains. Despite the S&P making new all-time highs, we're still seeing elevated demand for upside calls as investors position for further upside in the months ahead. Mandy, I'm pleased to say, joins us around the table. Mandy, good morning.
Good morning.
Why do you believe then, and let's build on this, the path of least resistance is still higher?
So, I mean, this is what the option market is signaling. It is what investors are actually putting money toward, is buying those upside calls. So couple things that stand out to us. Measures a skew in the options market, which looks at the demand for puts versus calls. That's at a multi-year low across all the major global indices, particularly for Russell 2000. So to go back to the question of, is this going to be a rally led by tech? Now more and more we're starting to see, beginning November last year with the Fed pivot, people playing for potential broadening out of that rally. So looking for upside in the Russell, because we have S&P at all-time highs, but Russell's still down 20% from its peak, right? So Russell's still in a bear market. So that's kind of where the potential catch-up is, and that's where we're seeing the most elevated demand.
How crowded is positioning, particularly not just in sort of long positions, but also in this broadening out trade?
Yeah, to give you a sense of how extreme some of the positioning has gotten, at least in the derivatives market, if you look at the spread between Russell volatility versus S&P volatility, that's gotten to basically a 10-year high if you take out COVID. Right? And that's very unusual because typically when Russell volatility is rising relative to S&P, that's usually during times of duress when people are pricing in more recession risk. This time, the entire bid to that vol is coming from the upside.
Given that, how price to perfection is this? I just go back to the conversation that you had, John, with Greg Jensen of Bridgewater in Davos, but there is this question of how fragile are some of these positions to just one data point that comes out that's highly negative?
Yeah, I mean, I think everything is really dependent on the economic outlook, so certainly things could change and move around pretty quickly, and we do see in the Russell, at least, it is the most reactive on economic data release days, whether that's CPI or FOMC. So certainly I think that the macro narrative can change, but at least in the equity market, kind of everywhere I look, that sense of optimism and the soft landing story, that's definitely what is being priced in.
What do you make of what's happening with the Russell versus, say, the S&P? You've got the S&P at all-time highs and the Russell still climbing out of a bear market.
Yeah, no, I think for me, for Russell to really, well, the reason why it's underperformed is pretty clear, right? It has much more overweight the cyclical sectors, and obviously growth has been slowing. I think this expectation for Russell to outperform, right now it's driven by lower rates, it's driven by this Fed pivot narrative, but I think for it to really be sustained, to continue, you do need growth to pick up. So I don't think a soft landing is actually sufficient to get Russell outperformance. You actually really need to growth to accelerate, which, given the outlook for this year, that might be challenging.
You keep going back to economic data. You don't talk about earnings. How relevant are the earnings this season?
Earnings are relevant, but what we see, one measure you can look at to kind of get a gauge of how much is being priced for earnings is dispersion. Implied dispersion, the DSPX index, tells you how much is being priced in the next 30 days. And what we're seeing right now is the implied dispersion is actually lower at the start of this earnings season than the last 8 quarters, so last 2 years. So in some ways, people are pricing in less moves on earnings, but I would say overall levels are still elevated. So don't write off earnings, but I think given the run-up in market, expectations have built such that the hurdle to get a significant move on earnings is certainly higher now.
As you speak, I just think about the risk and reward. And we were talking with both Michael Gapin as well as Priya Misra, and they were saying we have about a 65% chance of a soft landing and about a 35% chance of a hard landing. I know how you come up with these 88.2 or 65.36, but if you take a look at what the options markets are showing, does it agree, or do you see a much higher probability of that soft landing being priced in?
I would say what is currently priced into to the option market is much more highly tilted toward the soft landing. So if you believe there is significant chance or a meaningful chance of recession, then definitely I think there is value in looking at those downside puts. I think, it's not just the measure of put versus call. If you look at measures of implied correlation, which is, the measure that I always go to when looking at expectations of recession, because that is the one catalyst where it really drives correlation levels higher, right? In a recession, everything sells off together. Measures of implied correlation, forward expectations of correlation in the S&P, multi-year lows currently. So everywhere you look in the equity market, I would say it's really pricing for that soft landing.
How much is this people hedging for the upside because that's where they got really beaten up versus hedging the downside? And then just their ownership has not changed that much.
I think that's a huge part of it, and I think that's the main story in Q4, right? Going into year end, that was kind of what I was saying. It's really a positioning story going to year end, the performance chase. But we're now at turn the calendar. We're starting at the beginning of the year, and that is still persisting. So I think part of it really comes down to sentiment.
Mandy, enjoyed this. It's good to see you. Mandy Zhu there of SIBO Global Markets. Let's get you an update on stories elsewhere this morning. Let's catch up with Yahara Hackers with your Bloomberg Brief. Hey, Yahara.
Hi, John. Donald Trump is inching closer to a rematch with President Biden. The former president comfortably beat his only remaining challenger, Nikki Haley, in the New Hampshire primary. That's a back-to-back win for Trump after claiming victory over Florida Governor Ron DeSantis in the Iowa caucuses.
She doesn't win this. This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night. She had a very bad night.
Shares of Netflix are surging in pre-market trading after the firm posted its best customer growth since its pandemic peak. The streaming service added more than 13 million subscribers in the last quarter of 2023, exceeding the street's estimate. Netflix recently gained rights to WWE show Raw as its first live event content. And more turbulence for Boeing. Alaska Air says it found loose bolts on, quote, many of its Boeing 737 MAX 9 aircrafts, the CEO said in an interview with NBC. It comes just after United Air dropped Boeing's MAX 10 from internal plans without canceling its order. And that's your Bloomberg Brief. John?
Yahara, thank you. That story gets more and more shocking. More on that story a little bit later this hour. Up next on the program, Trump on the cusp of a third GOP nomination.
This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night.
This race is far from over. There are dozens of states left to go.
That's next on the program. Just around a corner, the former House Speaker, Kevin McCarthy.
enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities
could face bigger challenges. Lessons next.
Fed was going to keep rating
World Cup. This is a three. As the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
When will the ECB decide to cut rates?
We are on the right path, but I'm not going to shout victory.
Bloomberg Television brings you the breaking news and detailed analysis after ECB President Christine Lagarde's press conference.
The wages issue is what I think the ECB is really focused on.
June is our base case.
There is still a 50-50 chance of a rate cut coming just slightly before that.
In many ways, they should have been cutting already early to stimulate growth.
The ECB decides. Thursday on Bloomberg Television.
1 hour, 16 minutes away from the opening bow. 4-day winning streak on the S&P 500 could well become 5. Equity futures on the S&P positive by 0.6%. Yields a little bit lower. We're down 2 basis points on a 10-year, 410.51. Under surveillance this morning, Trump on the cusp of a third GOP nomination.
You know, we won New Hampshire 3 times now, 3. This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night.
New Hampshire is first in the nation. It is not the last in the nation. This race is far from over. There are dozens of states left to go.
Here's the latest this morning. The former president defeating Nikki Haley in the New Hampshire primary. Trump cruising to victory by 11 points with over 90% of ballots counted. Haley trading by over 30 points, Anne-Marie, in polls heading into the primary in her home state of South Carolina next month.
Yeah, in the home state of South Carolina, it looks like she's up a very steep battle, Jonathan, with you have the former president up 30-40%. But when it comes to independents, Greg Valliere shows that this is potentially, writing this morning, where it's going to be a vulnerable spot for Trump. The major takeaway last night was Trump's potential weakness in November. There's no question that Trump has an enduring base of voters, but that base may not be sufficient to win the general election. He also continues to write that there is one area that's tilting towards Trump, and this is immigration. But what does this mean now, what's happening in Congress? Are Democrats going to be able to ink this deal? Because that would give a win to Biden, even though Republicans are definitely the ones that want something on this issue.
Let's start the conversation right now with Kevin McCarthy, former House Speaker, joining us around a table in New York. Speaker, good morning to you.
Good morning.
Let's get into it. Do you just assume Nikki Haley's going to leave this out and it's going to be Trump versus Biden all over again?
Yeah, I mean, think it's about 30 days before South Carolina. She's losing South Carolina. At the end of the day, I do not think Nikki Haley wants to lose her home state that badly. I think she'll probably pull out. I think it's difficult for her to win the majority. But the one advice I'd give to President Trump, it's about addition, not subtraction. His speech in Iowa was much different than his speech in New Hampshire last night. And what I would do if I was him, I would draw Biden into the campaign. Because every time Biden goes out, he shows his weakness. Biden cannot fix his biggest problem, his age. Immigration has now overtaken the economy. And the problem here is for Biden is he created it. There was no new bill that passed that created this rush of people across our border. It is just his administration policies. So he doesn't need the House and Senate to work out an agreement. He can do this administratively. So he's in a really bad position. He won last time by hiding. He cannot hide. So if I was Trump, I would start pulling Biden out. I would make the issue. Remember, a re-election is a report card. Your first election is aspirational. What are you going to do? Now there's going to be a report card on what you did, and no president has walked into a re-election in modern history lower than this, even Jimmy Carter.
Well, the former president has got to do something about attracting independents. Yes. Any evidence that he can do that based on what you've seen in Iowa and New Hampshire?
You can, because the challenge is looking back home. You sit here and you talk about data, what's happening in Wall Street. Voters are going to be voting on the passion of what's happening on Main Street. And if you look at what those interest rates are for a small business, get a loan at 12%, nothing's happening. So that's not going to change that drastically between now and November. And they feel it. They feel inflation when they go there. They know what the price of gasoline is. They see the border. Think of this. There's not one Republican in Congress elected from Massachusetts, and Massachusetts has a state of emergency based upon the southern border. You're here in New York. What does the mayor and governor say? Their number one issue is immigration. What is Illinois, a very big blue state governor? He's crying, don't send any more buses.
So on immigration, with Trump basically now being the de facto nominee, is that going to paint the fact that maybe this deal can't get done? Because why would Republicans in the House give Biden a win ahead of November?
Well, if you're elected, you want to solve a problem. The hang-up isn't with Republicans. The hang-up is with the president. Will he change his administrative policies that he put in place, not by any vote? And he is holding back doing that. In the House, we have a very small...
I'm talking about the border Ukraine aid package, the supplemental that the Senate is working on.
Yeah. Let's talk border. Ukraine and supplemental is different. Do I think it gets done? I think it's very difficult. Every day that progresses, less likely. But remember, in the House, you passed a bill. When we were Speaker, we had a 4-seat majority. Well, we passed the strongest immigration bill, border security, that we've ever done. We haven't been able to do it when we had a 30-seat majority. And what you've watched, that sat over in the Senate, they have not acted. That's a Senate majority. The president hasn't taken any administrative action. You've got now the president even saying the border is not secure, something he hasn't said in a long time. He's got his own secretary saying something different.
All right, so if you think a supplemental doesn't get done, what about actually funding the government? How many stopgaps is it going to take?
Well, I think it's a mistake. Look, I did a continuing resolution to be able to solve this before the end of the year. The numbers are already there. If they continue where they are right now, and it's the far right, the Freedom Caucus of the Republican Party holding it up, you spend more money and you lock in Pelosi's policies. If they would just start moving the appropriation bills, do this now, they would spend less money, they would put more conservative policies in, and there would be a victory. So they need to focus in the next month to get that done.
Let's put the Freedom Caucus to the side for a second and talk about the main frontrunner for the Republican Party, Trump, and talk about some of his policies. Do you think that a 10% tariff, blanket tariff, is a good idea?
Look, the president has always been very open to think that America has lost in this. And I think he's changed the opinion of America when it comes to China. So that's not going to be the number one issue people are voting on. They're going to be voting on the economy, on immigration, on gas prices.
But a lot of businesses are going to be voting with their money. And they don't want to see that. They think that it's a tax on the U.S. consumer and that the person who's going to really experience it is the person who's going to Walmart, the person who's going to Target. Do you agree with a 10% tariff?
Look, you're thinking this is going to defeat President Trump going in. It's not going to defeat President Trump going in. The president he has an American first policy, whether you agree or disagree with it. He has transformed what you look at Republicans and Democrats looking at China itself, not to have an advantage over America.
When it comes to the general election, we already saw it yesterday. Kamala Harris, President Biden, they're out talking about abortion. How difficult is this issue for President Trump if he wants to win these independents in the 7 swing states?
Okay, you just talk about the rally they had to talk about abortion yesterday.
Because they want to make it an issue.
Yeah, so how many times were they interrupted during this rally about abortion to go after Republicans? 14 times. 14 times the president was interrupted in a staged event that he thought he could attack Republicans about something. This is why I tell President Trump, engage President Biden. Go to a campaign with him every single day because his policies have failed. We've had 5 embassies he had to evacuate. We have war. We've got now the axis of evil like the 1930s. We've got inflation. You have all the things that Trump can say he did not have under his policies. So yeah, abortion could hurt, but let me tell you one thing too. Abortion was on the ballot last time when I was leader. We won 5 seats in California and 5 in New York. We won in Oregon. We won in Arizona. You've got to take the issue head on, but I firmly believe when the economy is this bad, when you've got immigration just strong, that outweighs the other issues.
The economy, a lot of people say, is very good. What do you mean it's bad?
Well, just what I made the point before. You talk about data and you say the economy is better. Go out to the American public. Leave New York and go out and listen to where
on Friday so that people are starting to feel better about the economy. Michigan consumer sentiment. Gasoline prices in New York now below $3 a barrel.
It's $5 in California.
Well, that's also some state issues when it comes to taxes. You know that.
All right, there's homelessness everywhere you go. That's a Democrat-run state. People feel something they haven't felt before. If you look at a poll in California, you look at independents, think immigration is a #1 issue. Even Democrats, it's a 70-30. If you look at Democrats themselves, because remember, when you run for president, you want to bring your base and you want to expand it. Well, the majority of Democrats think President Biden is too old. If you want to talk data, if he gets reelected, there's a higher probability that he doesn't finish out his term based upon his age and the vice president comes in. She's not very popular for the ticket itself. You've got internals people still talking about. You've got people who ran Obama's campaign openly saying, if he's on the ticket, we lose. You've got Democrats worried if they have to run under his ticket. You've got those who've run for president before saying you should switch him out. That's not strength going in. That's why I believe the sooner we get two individuals debating, it's a benefit to the country.
Well, let's see if even both of these individuals get on this stage and debate. But Speaker McCarthy, before you go, we have a few issues we have to ask you. One, do you think Speaker Johnson is going to get a motion to vacate like you were suffered and lost your gavel?
I don't think you can. Look, that was 8 Republicans. One person made the motion. It was 8 Republicans, so you had support in 94. But you watch what transpired after that. You went a month and you couldn't find somebody. And the top of the people who had the capability of doing the job got knocked out. So I think internally people look at that. And it was really based upon one member who moved it. He didn't want an ethics complaint to come forward. And I saw ABC yesterday, it's coming forward. So he's willing to disrupt the entire government to try to protect what he has done privately he doesn't want out. That's going to come out anyway.
I don't think enough people know your story. From flipping cars as a student to winning on the lottery, I think the first lottery, and buying a deli franchise. I think this is really important. Do you think that your party has left behind that traditional conservative vision of equality of opportunity and upward mobility? Do you think that the former President Donald Trump understands the essence of being a conservative in America?
Well, I think there's a debate about conservative, but I think he understands the entrepreneurship behind it. I mean, my story is, too. I grew up in the town of Bakersfield. Father, a firefighter, moved furniture on his days off. I didn't have money to send me away to college, so I went to community college, but I always had a work ethic. So I met a guy that had a car dealer's license. He happened to own a liquor store, and I paid him $100 to take me to the LA car auction, and I flipped cars. Now, it was illegal, but I didn't know it at the time. But I would go visit my friends who were away at college, and this weekend I was going to go to San Diego State, right? So I go to the grocery store to cash a check the day before the lottery started, so I buy a lottery ticket, and I win the lottery. Now, it's 1985. It's only $5,000, but this was before Biden inflation. So it was something, right? And so when I came back, I took my folks to dinner, and I took the majority of the rest of the money, and I take risk. I put it into one stock.
Yeah.
I made 30% on my money in 6 weeks. At the end of that semester, I took a break, and I tried to buy a franchise, but they wouldn't sell me one because I was only 20 years old. The other thing, I never give up. So I opened my own deli, not a franchise, and I did pretty well. And at the end of 2 years, I sold it because I wanted to finish college. I now had money to pay my way through college.
So I imagine you're not going to open another deli. What are you going to do now?
Well, the end of the story is...
Cabinet secretary?
No. There was the local congressman. He said, be an intern in Washington. I didn't know the man, but I thought he'd be lucky to have. So I applied, and he turned me down. But I ended up getting elected to the seat I got an internship for. Look, I believe the very best in America. That America is more than a country that's an idea. We need good people in there to serve. I will do whatever to help, but I'm going to go back to my entrepreneurial roots and
my
do some
Bloomberg's
things to help
lighting
the
up.
economy.
Got 5 seconds. What stock did you buy?
You know, it's back in 1985. It's called Fur Vault.
Fur Vault.
Remember, this was the day of Dallas. They were selling furs to Neiman.
USA, but the sign on the CEO's door often says, Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Live from New York City this morning. Good morning. 4 days of gains on the S&P, 3 consecutive all-time highs on the S&P 500. The benchmark in America better than good. On the NASDAQ 100, a record high at the close yesterday, up another 0.9%. The Russell doing okay as well, better than okay, up by more than 1 percentage point this morning, up by 1.16% on the Russell 2000. In the bond market, yields look like this: 2-year, 10-year, 30-year. Yields are lower by 3 or 4 basis points, 4.09% on a 10-year, down by 6 on a 2-year yield, 430.35. We're down by 3 on a 30-year, 433.29. And just to finish on foreign exchange, the ECB tomorrow, the Federal Reserve a week today. In the FX market, a euro 109.10. We're positive here by 0.5%. Under surveillance this morning, Donald Trump on the cusp of a third GOP nomination. New Hampshire voters handing him a decisive victory with over 90% of ballots counted, making a Biden-Trump rematch all but likely. Former UN Ambassador Nikki Haley vowing to stay in the race, looking ahead to the next primary in her home state of South Carolina in February. The former House Speaker Kevin McCarthy on the program just moments ago, suggesting that maybe Nikki didn't make it that far.
No, and he thinks that the sooner everyone can get around Trump, the better it'll be, because he thinks Trump needs to be talking about not Nikki Haley, but needs to be talking about Biden. He really, the speaker, former speaker, really thinks Trump needs to be bringing Biden out now and going up and against him on policies. Interesting, though, Jonathan, one thing the speaker certainly didn't want to talk about was abortion, and this is going to be a main driver for Democrats to want to get out votes.
And this goes back to something we've talked about in the last couple of days. Traditionally, we'd sit here on the program and say it's all about the economy. It's always about the economy. But if you think about more recent votes, particularly the midterms, it's been about other issues. Abortion being one issue, immigration being another.
Honestly, I was taking a look at a couple of different research pieces on why people don't feel better about things, considering that all of the economic data is great. And it's not just the fact that inflation cumulatively has been high. It's also the war. It's also the biggest amount of strife within the American population in a long time. This kind of harkens back to 1968 with a similar kind of feel.
Yeah, absolutely. Foreign policy, while it's not the real reason why Americans go out to vote, it's certainly an overhang, especially when it comes to the youth demographic. Biden was interrupted yesterday. The former speaker was correct. But about the war in Gaza, it wasn't about abortion.
The scars of inflation, I just want to pick up on this. It's amazing that we can have people come on the program and talk about how bad the economy is and still connect with voters when unemployment's south of 4%, jobless claims is south of 200K, the equity market's at a record high on the S&P 500 and on the NASDAQ, and growth as recently as the third quarter was something like 5%. And you can do it because there are so many people in this country still scarred by the inflation of the last few years. Even if you can sit here and make the case that disinflationary trends have emerged and will continue and inflation will slow back towards 2%, you can't get away from that issue.
Disinflation is a hard story to tell. And honestly, I think that that's the key. At this point, though, I don't understand a lot of the sentiment data, and we are seeing it inflect higher because right now what you're seeing is otherwise incredible strength. I mean, as these earnings come out, people signing up for Netflix in this incredible way. Just all, I mean, the people have money to spend, and a lot of people said, we were in the depths of the pandemic. We actually have climbed out, and that, the base case right now is a soft landing, even with the inflation that we've seen and the fact that it's going to come down.
You mentioned Netflix. Let's look at the stock in the pre-market, absolutely flying, surging in pre-market trading after reporting its best quarter of growth since the pandemic. 13 million customers signing up in the fourth quarter thanks to a cheaper ad-supported option and a crackdown on password sharing, and management hinting at more price hikes ahead, saying this: as we invest in and improve Netflix, Anne-Marie, occasionally we'll ask our members to pay a little extra to reflect those improvements.
I think it was thanks to David and Victoria Beckham.
You mentioned that.
Yeah, I think that was this blowout documentary they had. People, it was one of their top rated. People loved watching it. My parents watched it and then signed up for Netflix.
13.1 million people decided David Beckham, that's it, I'm in. Well, I mean, there's a lot there. I don't know about that. I'll let you have the David Beckham beat, but I am curious whether we go forward and we see that this sort of password sharing crackdown works for others, or if this is just Netflix and the sort of investment that they've done in content.
Well, clear two structural issues that have helped boost this name over the last few months. The ad tier is one, and the password sharing clampdown is another. And it's interesting, after you absolutely smash estimates for every region on the planet, that we're talking about price hikes now. If that's where the revenue growth is going to come from, what's it going to be? Actual subscriptions or price hikes on existing subscribers?
And if they can have a bigger base to hike prices, then they're in good shape. All I can say is the advertising thing. Would you actually pay more to not see an advertisement at the very beginning for a couple of 30 seconds? Seriously?
Waste of time.
Really?
Yeah, don't you do that?
No, I don't.
Yeah, I'll ad-free every single time.
Really?
Yeah,
I'm actually curious. I want to see what different people, how their marketing techniques are working.
I just don't want to waste time watching commercials.
Time is valuable.
That's just me.
Okay, all right.
We are the same person. It's okay. You're allowed to have a different preference on the issue.
All right. I
think we'll all share the same opinion on this story. Loose bolts were found on many of Alaska Air's Boeing 737 MAX models, according to the company's CEO. The findings come as airlines conduct inspections of the jets following a mid-air panel blowout on one of Alaska's flights earlier this month. The Alaska Air CEO telling NBC he's angry and frustrated and wants to know what Boeing is doing to improve their quality programs. I have to say, I know it's a word that's overused in this story, but just another absolutely shocking element to this, that they've gone away, they've checked the planes, and this is what they've found.
Okay. This is so unusual that you have executives, top executives of airline companies coming out and publicly or even semi-publicly questioning the safety of a supplier of aircraft that they use. To me, this is a game changer. And I have to wonder if this amping up, I mean, honestly, it's so graphic. The bolts are loose. I mean, this is like, not exactly what you want to hear before you get on a plane.
No, and I know you've been checking whether or not you're flying Boeing or Airbus. I took an Alaska Airlines flight in November from San Francisco to JFK, and I looked back yet last night, and it was one of these Boeing jets, and I was quite concerned. But
retrospectively?
Yeah, retrospectively, I was concerned about the aircraft I took, and I'm, said my prayers. But in all seriousness, a Boeing CEO is going to be in the hot seat today. He's actually on Capitol Hill. Bloomberg News reported, going to be meeting with some senators, and they're going to have a lot of questions for him.
That's the latest on Boeing and Alaska Air. Let's turn to the data. Key economic data due out later this week, including fourth quarter GDP and core PCE. Andrew Hollenhorst of Citi looking ahead to the data, saying this: while 2% growth and 2% inflation will look like another quarter of Goldilocks, data for the Fed, we remain skeptical that these soft landing dynamics will last. Andrew Hollenhorst joins us now for more. Andrew, let's get into that. What are you anticipating here? Re-acceleration of inflation supported by the easing of financial conditions in the last few months? What is it?
Yeah, it's interesting because we actually have risks on both sides now, I think. What we have on the activity side is the lagged effect of higher interest rates that we were starting to see towards the end of last year showing up in the data, particularly on labor markets. You have some signs that labor markets, which have softened, are just going to continue to soften. Now you have this really complicating factor of easier financial conditions, to your point, and that is re-accelerating some sectors of the economy, and we're seeing that in housing in particular, and that gets into the inflation issue, where we have shelter prices that are still rising rapidly. Even the official measures of shelter price inflation have not slowed as much as economists were forecasting. And then you look at house prices. House prices are rising 8 to 10% annualized. So there really are risks on both sides of the Fed's mandate. And I think that the risk is that we see this data and say, okay, 2% growth, 2% inflation, that's what we were looking for. We're getting it for a quarter. It doesn't mean that we're necessarily going to continue to get it.
Andrew, you've been warning about inflation being maybe a bit hotter than people expected for quite a while. Have you adjusted your view, though? Do you kind of come to the same kind of conclusion that even if on the margins you might have a bit hotter inflation, it is coming down enough for the Fed to cut rates more than you thought maybe 6 months ago?
Well, we've been surprised at how quickly core inflation has slowed. We actually haven't changed our view too significantly on when the Fed would start cutting interest rates. We've always had them cutting interest rates around the middle of this year, which was both on the idea that inflation would slow and that activity would slow. The Fed, like we were saying in that note, they're going to see this inflation that, core PCE inflation, if you focus on this, one particular measure, 6-month core PCE inflation is running below 2%. But that's where you get into, are you looking at a narrow measure of inflation, or are you kind of looking at more broadly what's going on with inflation? If I look at core CPI, that's running a lot stronger than core PCE. Now, it tends to run stronger. But if I look at the service sector in particular, that's where you're really seeing continued strength, and wages that are the most important cost for the services sector are still rising 4 to 5% annualized. So I really don't think that we're on a sustainable path to 2% inflation. Fed officials are saying they're not sure we are either, but then if you kind of listen to their full comments, it sounds like they're pretty convinced. So I think they're going to be convinced enough to cut interest rates. But are we really headed back to 2% inflation? No, I don't think so.
Given that, are you more skeptical of a soft landing than everybody else, given the fact that maybe the Fed's going to either have to reverse course and hike rates back up, or cut rates more slowly than people think and kind of boil the frog?
Yeah, so Chicago Fed President Goolsbee calls this the golden path. And this quarter, we're kind of on that golden path, right? We have growth that's slowed nicely from the third quarter. We have inflation that's slowing down. But I would call it a narrow path. There is a path to a soft landing. It is possible that inflation just comes down and the economy cools nicely and we don't go into a recession. But is that the likely case? No, it never has been likely. It's still not likely. Of course, markets are going to feel that it's more likely right now because that's what we're seeing in the data. A lot of the slowing in inflation has been slowing in goods inflation. That doesn't really have a lot to do with slowing down the domestic economy. That has to do with what's happening globally. And now look what's happening globally. We have disruptions in the Red Sea. We have shipping costs that are rising. There's no guarantee that goods inflation is going to slow further. It may even pick up from here. And then we still have the domestic issues in the services sector and the shelter sector.
Andrew, what's your latest work on that? Developments in the Red Sea, tension, not just there, but also some of the traffic through the Panama Canal has slowed for a very different reason. Have you done any work on that recently, on whether that's going to show up anytime soon?
Yeah, that's right. There's some good work that the IMF did on this actually some time ago in response to the increase in shipping costs that we saw during the period of the pandemic. And now we're seeing some of those same shipping costs rise. Now, to your point, John, this is not as generalized as we saw at that point. Red Sea is going to be more important for trade between Asia and Europe. As a U.S. economist, yes, that shows up for the U.S., probably not as directly as it does for Europe. But then you also have this issue with water levels, drought in the Panama Canal that's also restricting trade. So the IMF puts the numbers together. They get a few tenths of a percentage point on inflation. I think that's a reasonable estimate for how much higher inflation you could see. And so not a total game changer. But this idea that inflation is just headed down, it's one reason that it could be headed back up.
Andrew, just quickly, just to wrap it up, looking ahead to next week, just a week away from that news conference with Chairman Powell, what's the number one thing that you and the team are focused on?
What we really want to understand is this a Fed that's looking to cut rates as early as March, or is this a Fed that's waiting to kind of take their time and move carefully, like Governor Waller said? I think we're going to hear Powell more in this careful camp, which would indicate more of a June rate cut. But let's listen closely. These things are changing quickly. If he sounds more dovish, then those expectations could be moving into May or March.
Andrew, thank you, sir. Andrew Hollenhorst there of Citi. Kind of on the fence a little bit there towards the end, Bramo.
Yeah.
When we get that first cut.
I mean, that's the issue, is that as much as people push back, it seems like the Fed isn't pushing back enough to get that March rate cut really priced out of the market.
That decision, 1 week away. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. Authorities in China are making another attempt to boost the economy, with the country's central bank cutting the reserve requirement ratio by 50 basis points. The move becomes official next month in a bid to free up lending and cash. China's government is also mulling a $278 billion rescue package for stock markets as growth worries continue. Tesla is telling suppliers it wants to start production of a new mass-market EV midway through next year. That's according to Reuters. Currently, Tesla's cheapest car starts at almost $40,000, but this reported model would start well short of that. The company will report earnings later today, with the stock down more than 15% to start the year. And more woes for Boeing. The FAA says a wheel fell off a 757 jet on Saturday at Atlanta's Hartsfield-Jackson Airport. According to a preliminary report, a Delta flight was preparing for takeoff to Colombia when, quote, a nose wheel came off and rolled down the hill. More than 170 passengers were aboard and had to deplane. No one was hurt, and the FAA is still investigating. That's your Bloomberg Brief. John?
They've got a lot to investigate, haven't they? Yahira, thank you. Next on this program, the future of energy.
We actually are very concerned that the larger global effort to fight climate change is missing a major focus on developing and emerging economies.
A conversation coming up next. You're watching Bloomberg Surveillance live from New York City this morning. Good morning.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg. Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg.
Live from New York City, good morning. Your equity market positive by 0.5% on the S&P 500. Yields lower by 2 or 3 basis points. 4.0993, a week away from a Fed decision with equities at all-time highs, Lisa, for a third consecutive session yesterday.
And really, while this has been driven by big tech, as we were hearing from Mandy Zhu earlier, this idea that people trying to lean into the Russell 2000, that sort of rotation story, just a little bit more as we think about what a soft landing looks like.
The Fed a week away, the ECB about a day away, the euro at the moment about 109 against the dollar. Under surveillance this morning, the future of energy.
We actually are very concerned that the larger global effort to fight climate change is missing a major focus on developing and emerging economies. 75% of all future emissions will come from 81 countries that today are classified as housing more than 3 billion people that live in energy poverty. We're trying to change that pathway for those billions of people to focus much more on renewables.
You can watch more of David Rubenstein's interview with Dr. Rajiv Shah, the president of the Rockefeller Foundation, tonight, Lisa, on Peer-to-Peer Conversations, 9 p.m. on Bloomberg TV.
The conversation has shifted around renewables, and I think that it's important to reflect that now people are talking about the practicality of it, and this really is important to discuss ahead of Tesla earnings later today. The head of a UK insurance company, Carl Schuker of Howden, was telling Bloomberg News, and this really speaks to the practicality of this. You've got length of repair times going up for electric vehicles. You've got the cost of the component parts going up. And you probably see more EVs written off because residual values are particularly low at the moment. And this is the reason why they are charging drivers twice as much to insure electric vehicles in the UK. So here's the question. It's not a matter of if people are going to shift their habits. It's a matter of when, and it's a matter of how they can make the financials work. And that's really been the massive discussion in a lot of renewables.
This came up a lot, I think, to start the year. This is not necessarily about changing objectives and the ultimate destination.
Correct.
It's about the speed we get there. I think you've noticed that with Hertz in the last week, and Ford has had reality check after reality check about demand for some of these vehicles.
And we've seen a much more practical tone, which is a reason why when we hear people talk about these highfalutin goals, there is an underpinning of practicality to it, which is a reason why someone who's really a pioneer in this is really compelling to talk to about investment, as well as some of the hang-ups.
Let's catch up with David Rubenstein, the host of Peer-to-Peer Conversations and co-chairman and co-founder of the Carlyle Group. David, sir, it's wonderful to hear from you, as always. I just want to get into that conversation that you've had, and it's going to play out a little bit later. We've all heard of the Rockefeller name. Talk to me about the work of the Rockefeller Foundation. What were you focused on?
The Rockefeller Foundation is more than 100 years old. It has an incredibly illustrious name, of course. It's not as big as the Gates Foundation. The Gates Foundation is by far the biggest of these type of foundations. But the Rockefeller Foundation has a terrific name, terrific staff. I interviewed Raj Shah, who for the last 6 years has been the CEO of the Rockefeller Foundation. And what they're focused now on is climate change. They've done many other things throughout their long history. Right now, climate change is what they're working on, particularly in the emerging markets. And their hope is to get partners who will help them develop renewable energy sources for many people in the so-called emerging markets. And that's what their focus is now. And Raj Shah is an incredible individual, the son of Indian immigrants. He has an undergraduate degree from University of Michigan, a medical degree from the University of Pennsylvania, but he decided not to practice medicine. He initially went to the Gates Foundation, worked on global vaccines, then was the head of USAID under President Obama, and now is the head of the Rockefeller Foundation. Very impressive individual.
David, as an investor and also as somebody who has conversations with a whole host of luminaries, how has the conversation around climate change shifted away from sort of, these big pronouncements and massive steps and the nuts and bolts of making it economically feasible?
Well, of course, almost everybody's against climate change or wants to do something about it, but getting it done is proving to be harder than we'd like. Obviously, the recent COP28 meetings had some progress, but we have to recognize that in your lifetime and my lifetime, we're not going to make gigantic progress. It's going to take many, many, many decades, if not a century more, before we really get to the point where we want to be. We have goals, of course, to get to net zero by 2030 or 2050, depending on the circumstances you're talking about. But it's going to take a long time because so much of the carbon is already in the atmosphere and isn't going to dissipate for decades. So we need to change people's habits, but it's very difficult to change people's habits when they don't see the benefit right away. Very few people change their habits because their great-grandchildren are going to benefit from it, and that's the dilemma we all have now.
David, what Raj is doing now with climate really was what he did with global hunger at USAID. How much does global hunger still impact what he's doing at the Rockefeller Foundation?
Well, the Rockefeller Foundation has had a long history in that area, and they backed Dr. Norman Borlaug, who developed the miracle seed that helped revolutionize the way agriculture is done around the world. And they've had a long history in trying to make sure that people have enough to eat around the emerging market countries. But that's not their main focus right now. Their main focus right now is climate change and trying to make certain that in so-called emerging markets, people have access to energy. Many people don't have access to real energy now, but particularly renewable energy, which they think will be much safer and much better for the world.
David, before we let you go, I got to say, as one of the founders of one of the biggest private equity companies in the world, do you believe in this idea that we're heading into a soft landing and that this year is going to be the start of a new cycle?
I certainly hope so. I think we've kind of gone past a likely hard landing. Everything can always change. The world's never certain of where we're going to go. But right now, I think the Fed has done a pretty good job of getting us to a soft landing. The question really is, when will the Fed begin to cut interest rates? Nobody really knows. My own view is that they probably want to do some cuts before the presidential election is in high season, so they won't be accused of helping the incumbent party. But also, they want to make certain that they don't have to reverse themselves. They don't want to start cutting rates and all of a sudden inflation comes back and they have to change their position. That would be very bad for the Fed. So they're watching it very closely. I suspect we'll see something out of the March meeting.
You expect the potential Fed rate cut in March, in other words?
I suspect it's something on the table, but it won't be a massive one. But I think they recognize that if they wait until the fourth quarter, or third quarter, I should say, it might be a little bit in the political season. So they probably want to get any rate cuts out of the way in the first and second quarter.
How many rate cuts are necessary to really reignite market activity? Are you basically saying, all right, that kind of March rate cut and sort of front-loading it is going to explode the scene on deal making?
Well, the market has already anticipated this, so if the Fed were to disappoint us, it would be not a good thing, I think, for the markets. But I think the number of rate cuts is less significant than the level of them, of course, and we don't know whether they'll have 25 basis point rate cuts or 50 basis point rate cuts, as they did in increasing rates. But I suspect they'll put their toe in the water with a 25 basis point cut in the not-too-distant future. That would be my guess. But again, I'm not really at the Fed meeting, so I can't really say for certain.
Well, we appreciate your guest, sir. Thank you very much. David Rubenstein there of the Carlyle Group. Looking forward to the program a little bit later on. They want to avoid being political, so they've got to make political considerations. It's always the tricky part of all of this, Bramo, when it comes to election year.
Honestly, a lot of people, and we heard this yesterday from Priya, this sort of conflict. They're not political. They don't want to do this. They shouldn't let it affect things. Will it affect? It's so unclear. I mean, this is the tough thing because they're either political or they're accused of being political. There's sort of no winning here.
Also, remember what happened in December. President Biden came out and said we're in a sweet spot right now in the economy, and the Fed should not continue on their hiking path. Everyone thought, we'll see signaling to Jay Powell to ease it off and potentially give me a cut going into November. I mean, that's what Wall Street was asking.
I think it's all conspiracy theory. I don't buy that. I think that they're trying. I think the hard thing is you cannot extricate a political cycle from the economy. And I think that's the really hard thing, considering that people we hear every day aren't going to be doing big deals before it because of the uncertainty. So I just think it's very tricky to sort of assume that you can parse these two things in perfect way.
You can't ignore it. You can't ignore it at all. Coming up tomorrow, you can't ignore this stacked program on Bloomberg Surveillance. Virginia Governor Glenn Youngkin, Senior White House Advisor Amos Hochstein, Paul Taubman, PJT Partners CEO, and Deutsche Bank Chief U.S. Economist Matt Lazzetti. All of that coming up tomorrow, a week away from a Fed decision, a day away from an ECB call, and President Lagarde. Round 3 for President Lagarde in the last week. What did we say? It's the third news conference of the last week.
Yeah.
Round 3 comes up tomorrow. We'll take that in full on Bloomberg Television for you. In the equity market right now, going into the opening bell, 35 minutes away. Equities positive, 4-day winning streak. Could well make this 5, up 0.5% on the S&P. Bramo, all-time highs yesterday and record highs in sight this morning.
What I'm watching is definitely Russell 2000, how much it's broadening out, in addition to tech earnings continuing to deliver massive amounts of cash to edify some of the rally we've seen.
Live from New York City this morning. Good morning. This was Bloomberg Surveillance.
You later got asked to be the head of USAID.
I got that job when I was 36 years old.
36 years old. You're running USAID. How many employees does it have?
We had 11,000.
And did you feel qualified to run something that big?
I did until, the work started.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Warren Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things we have this great connection about the love for baseball, and the reason why Warren and I got to know each other is he insured my contract, the 252, and I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
From New York City, for our viewers worldwide, I'm Menace Craney in for Jonathan Farrow. Here we are, we're cruising towards the 4th day of record highs, maybe in the S&P 500. Do you get vertigo up here, or do you buy protection? Countdown to the open begins right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Coming up in the show, futures point to more record highs on the street. Netflix getting the tech earnings off to a solid start, and Donald Trump inches ever closer to that rematch with President Biden. We begin with a big issue, a critical 48 hours for markets.
Look at the data.
The data, GDP, etc., coming up.
PCE spending in the U.S.
GDP numbers, PC numbers are going to be very important for the Fed outlook.
Everyone believes that the next move by the Fed is a cut.
The question is when and by how much.
We're in a soft landing right now.
Growth is going to likely to surprise us on the upside.
We see strong growth, and we see that there is a risk of reacceleration in growth.
We do expect growth to remain positive as we look further out into the new year.
Baseline, I think you still need the economy to cool to get the Fed to cut.
What gets them to cut in March is the inflation data.
Inflation's coming down. It's coming down decisively.
There could be this stickiness to inflation, which of course makes the Fed's intended path a bit more trying.
The more they wait, the harder it's going to be to cut rates.
They're going to be taking a read on that macro outlook to figure out when to cut rates.
Joining me now to debate when the rate cuts come, it is BlackRock's Gaji Chowdhury and JP Morgan's Jack Caffrey. Good morning. So let's talk about, can they extend, can they wait until the summer to cut rates? Let's start that conversation with you, Jack.
You know, I certainly think that you've seen a dramatic repricing of the expectations of whether we're going to get that cut in March. I would be more inclined to think we're going to get a very dovish statement because once the Fed does cut, they do tend to continue to cut continually. And so I think that they're going to want to wait a little bit longer to see a little bit more weakness of the soft landing, more evidence thereof, because the last couple inflation prints and employment prints have not been consistent with the sort of dialogue of a shift towards the aggressive cuts that many bond market participants had been pricing in as recently as a week ago.
Okay, so it's a question of whether they got the ammunition to go early, and then they got politics getting in the way, haven't they? Gagi, let me bring it to you. Should they extend? Is it folly to go too early?
Good morning, Manas. It's great to be here. Thank you for having me. I think given the totality of the data, I'll use some of the Fed's language. I think for March, it does feel a little too early. While inflation is making meaningful progress,
data hitting the tape on the PMI, on the terminal. Mike McKee is side by side with me. It looks like a very comfortable set of beats. Mike, dig deeper.
Yeah, a big difference between the United States and the rest of the world on these PMI numbers. Excuse me. U.S. manufacturing comes in at 50.3. It's the first time since earlier in 2023 in March that we saw a number over 50 signaling expansion, and it's the highest since October, I believe, of 2022. The services PMI comes in at 52.9. That is up from 51.4, and the global composite at 52.3 is up from 50.9. So strong beats on the U.S. Purchasing Managers Indexes, which completely are 180 degrees from what we saw out of Europe this morning. The Europeans pretty much all in the 40s, suggesting there is still contraction underway in manufacturing services and the composite indexes for most of their economies. One other headline, Manus, out just a moment ago, the Bank of Canada keeps its main interest rate at 5%. That was expected by everybody that Bloomberg Economics surveyed. Governor Tiff Macklem is saying that the path to the 2% target will be long and slow, and the question now becomes how long do they leave it at 5%, which is sort of an echo of what we're seeing in the United States these days.
Indeed, but those are bang-up strong numbers, Mike, in the United States of America. Mike McKee on the data. So Tesla reports after the close today. Deliveries and demand are going to be the focus for the EV maker. Baird's Ben Callow joins me now with a preview. You have an outperform rating on the stock. $300 is where you point to. Good to have you with me, Ben. I like how you encapsulate the situation here. We have had demand skepticism, we've had price cuts, we've had outages in Berlin, we've had multiple headwinds. But set the table for me. Demand skepticism will be defied?
Well, what we've seen so far this year, there have been price cuts across different geographies. And so, they are using price as a lever to increase demand. I do think the refresh of the Model 3 and the rumored refresh of the Model Y should also help with demand in this coming year. And I also think that the way that the credits work for the EV tax credits at the dealer at time of purchase should also help with demand as well. And then, as we look at numbers this year, Tesla in the past has talked about a 50% growth rate year over year on the long-term basis. Right now, we're at about a 16% growth rate. The street's somewhere just north of us. So numbers are tempered, and everyone's kind of bracing for a year of maybe weak demand. Now, looking forward into 25, we're getting news out that they're looking to have the Model 2. This is the mass market vehicle, come to market and start production sometime next year. And these are rumors from their suppliers. That could boost volumes considerably and be a big catalyst for the stock this year.
Tell me this, it's the perennial question. Is Tesla a battery technology company, an AI futurist company, or a car company?
Yes, it's all three of them. I think that, we've seen it's an auto company. Energy should be a bright point of the business this quarter and definitely into 24, where it starts getting close to 10% of overall corporate revenue. And so that's showing itself as a real business too. AI is still out there. There's lots of skeptics, but I think this is a year where Tesla starts proving out that they do have the capabilities there. And there's been the discussion around must-pay package, which is important there, as well as they start moving more into AI.
Well, pay matters. We've seen that in Banky, Jamie Dimon, along with the outgoing Morgan Stanley CEO. Ben, tell me this. I look at China. BYD takes the top spot in electric vehicles in China. We know the national story there. That's fine. But then you look at the data about the growth in EV in China, and this is what we got for you. EV growth is set to slow for the second year this year. It will grow 25%, 11 million units this year, but that's down from 36%, down from 96% in 2022. Is the trajectory for China and Tesla's position in China materially on a downward trajectory, or is it a temporary interruption, and how important is that?
Well, I think overall, we always look at competition as versus internal combustion engine as you take more share there. Headlines would say that no one's buying EVs, but we've seen growth across China, across North America, across Europe. Now, a slowing growth in China, that could be a concern. So far, we're still seeing strong numbers out of China. Still early in the year, though. I do think price cuts can help, and definitely that the Model 2 coming to market, I think propels growth. As we look into next year in China.
What is it that gets me to $300?
I think us seeing trough margins is one big thing. Us learning more about Model 2 and how far along Tesla is, and really what they've been doing is, to use Musk's phrase, building the machine that builds the machine. I think that they're nearing finalization of the line, the design of the line to build this Model 2. Hear more information about that would be a catalyst. And I think, getting up north of 300 is when you start talking about Optimus licensing full self-driving to others, using the Dojo computer for other industries, licensing that as well. That's stuff people are very skeptical about, but I think that can become a reality this year.
Okay. We'll keep an eye on that target. Ben, thank you very much. Let's see what the numbers deliver this evening. For some of the sector price action this morning, let's get across to Abigail Doolittle. Abby, what have we got?
Well, we have a pretty robust gain here today, Manus. We're looking at above average volume to the last 20 days. We have most of the sectors higher. And of course, we're looking at that fifth up day for the S&P 500 in a row, 4 record highs in a row, the first string of that since in about 2 years. Communication services, not surprisingly, leading the way, helped out by Netflix. Tech is also up there to the downside. Materials, as DuPont weighs on their negative pre-announcement. Consumer staples, industrials. Let's dig deeper on that communication services sector, though, because it is part of the reason that we have the S&P 500 up over the last 5 days, gaining 5.9% over those last 5 days, Manus. That's the best stretch going back to November of last year.
Whoop, whoop. There we go. All hell. Stay fully invested. Don't get vertigo. That's the note from UBS. Abigail, thank you very much. Abigail Doolittle on the sectors. Coming up on the show, we'll give you the market moving events that you need to slate in your trading diary on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg. Your fixed income fix. Watch Bloomberg Real Yield at its new time Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Equity investors have not caught vertigo. We've still got rising markets. We're waiting for IBM and Tesla to deliver their numbers. If we stay in the green here, there's going to be the 4th day in a row of record highs. Do you want to stay fully invested? Let me give you your trading diary for this Wednesday. Tech earnings continue. Tesla, IBM reporting after the closing bell. Thursday gets set for another central bank. The ECB delivers their decision. Christine Lagarde will guide you through the press conference. and the U.S. strong GDP figures. Is that what we will get? Friday gives you the Amex reports. Have you been spending? And of course, the U.S. PCE print ahead of the Fed's decision next week. That needs to come in at or better than 3% to maintain your investment in investment-grade credit and high yield, according to BlackRock. That was the conversation this morning on Countdown to the Open. I'm Manus Cranny. This is Bloomberg.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. Lots of testing, lots of thinking about what could go wrong, lots of research. When I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of, like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
You later got asked to be the head of USAID.
I got that job when I was 36 years old.
36 years old. You're running USAID. How many employees does it have?
We had 11,000.
And did you feel qualified to run something that big?
I did until, the work started. Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
We're 30 minutes into the U.S. trading day on this Wednesday, January 24th. Here are the top stories we're following for you. Earnings season in full swing, with Netflix posting its biggest subscriber gain since the pandemic. Tesla takes the stage tonight. We'll preview what to expect. The physical economy versus the financial economy. How does sentiment differ heading into the 2024 election? We'll discuss with the CEO of Snap-on, a maker of high-end tools and equipment. And finally, the 2024 media outlook. Activate CEO Michael Wolff joins us in our Wall Street Week daily segment to break it down. I'm Katie Greifeld in New York. Welcome to Bloomberg Markets. And let's start with a check on those markets, because right now you have the S&P 500 higher by about 0.5%. Big tech doing even better, up about 0.8%. All is pretty quiet in the bond market, probably helping that equity rally, though I will note that 10-year yields currently above 4% and staying there. You take a look at the VIX. We were at a 13 handle about this time yesterday. We're below that right now, trading with that 12 handle. We'll see how low vol can go. But let's talk about Netflix, because the stock is absolutely soaring after it reported its best quarter of subscriber growth since the early days of the pandemic. Now, the streaming giant had added 13 million viewers. It also reached a deal yesterday with the WWE to stream its flagship show, Raw, on the platform. And for more analysis, we're now joined by Geetha Ranganathan of Bloomberg Intelligence. And Geetha, you think about what we learned last night. How much of the subscriber growth was fueled by what we're seeing when it comes to the password crackdown?
I think almost all of it, Katie, came from that password sharing crackdown, because that's something that they've implemented across all their territories, and it's definitely bringing in results. We saw really good numbers, as you just pointed out. Subscriber gains came in 50% above consensus expectations. And I think what's really kind of driving the momentum in the stock today is that we're going to continue to see this growth. I mean, we still have a huge amount of, untapped potential when it comes to that password sharing monetization. And then, of course, you have the other lever that Netflix can pull with its advertising tier.
If I were looking for anything that would make me cautious in these results, would I find it? Where would I find it?
That's the whole thing. You really can't find it. I mean, so we had, of course, Blockbuster, a very high quality earnings scorecard from Netflix for 4Q. But then just going forward into 2024, I mean, they've just kind of hit the jackpot when it comes to finding this winning formula, right? They have subscriber scale. They have their whole revenue reacceleration levers in progress. And then they have, content. They're able to create good content. But at the same time, they're balancing content costs. And they guided to an operating margin expansion. So we'd initially expect
hits just keep on. At least keep getting a fusillade of bad news. Even yesterday, you were covering one of these things, heaping more coals of uncertainty on the small business people and the people of work, talking about WWE moving Raw to Netflix. You know, it's bad enough that you don't get to see Bret the Hitman Hart anymore, The Undertaker, and his manager Paul Bearer. But now we don't even know if we're going to be able to see Raw anymore.
Yeah,
that's a question. You know, you said yesterday, I think, that you wanted to get to know WWE, and I can tell you, if you want to be one with the people of work, you ought to watch the Royal Rumble this weekend.
Well, apparently, when this deal gets signed, there will be 3 live hours of wrestling on Netflix. So there you go. Maybe I'll watch all 3. But I want to talk a little bit more about the election. You talk about the uncertainty over the election, of course, what regulations might follow. And for some of these geopolitical concerns that you mentioned, I mean, those issues transcend any 4-year term. And with that in mind, does it really matter who's in the White House?
Actually, I don't know. It matters to different people. Generally, if you're somebody like me, you go back to, well, who's the Saturday Night character, Roseanne, Dana. It's always something. So my job is to manage over that. But small businesses are more vulnerable. Regulation, for example, NAM will say that regulation costs small businesses tens of thousands of dollars per year per employee. Now, one of the things that does happen is you see this balance play out. And what we've seen it happen in the great financial recession and in the COVID, where when the balance start to get negative over the positive, and it's not really clear where it is today, those people, they still have business, so they remain cash rich, but they become confidence poor, so they sort of like pivot toward lower payback items. I think you saw P&G talk about that on their call the other day, where smaller items are selling pretty well. And that's what you start to see. And that does slightly attenuate the economy. So it doesn't really matter who's in the White House. It can make a difference from time to time, but it is the change. I can tell you this, every time you get a new election, there's a new sheriff in town and there are new rules and you have to adjust. So small businesses have the least capability to do that. So the grassroots economy has a little more difficulty in that regard. So they tend to view that a little more heavily maybe than big business. And in fact, you see that play out in the NAM surveys.
Nick, I want to talk a little bit about supply chains because you brought up the Red Sea and what we're seeing there. When you're talking to some of your Snap-on customers, how concerned are they about supply chains and how much of a push is there to bring some of those supply chains onshore or near shore?
Concern about the Red Sea is one thing. I think anybody can figure out. I mean, it's like a version of the pirates of the Red Sea. You know, now they're boarding some of these places. So people worry about that, but they're not seeing it. Certainly not in America. Yes, I think you interviewed a guy who was a supply chain expert yesterday, and he kind of said that. But what happens is, so far, we're not seeing anything either in our overall company or our customers. What the worry is that extra 2 weeks starts to put a strain on capacity, and that becomes a problem. And then therefore, rates go up. Now, I think you said yesterday 2 to 3 times up. So in some cases in the COVID, they were up 10 times. And in the pandemic, it wasn't so much the prices, it was the availability. So people had to pay spot rates, which were much more than the standard prices. So that became a problem in this situation. One of the things that does happen, if you look at it, manufacturing out of the pandemic was looking at reshoring. I used to meet with any number of manufacturing executives and said, I want to get back on shore. But there were 2 things about it that were barriers. One is not enough workers. Right now, there are 547,000 jobs open in manufacturing. And secondly, the receptivity of the government to support manufacturing, and have both of those. One, I was just in Washington representing the NAM with the speaker and talking about the idea that manufacturers are starting to think, boy, this idea of onshoring is more focused, maybe just on chips and general manufacturing. You know, we feel like chopped liver. You know, no one really cares about. Not no one really cares, but generally they, in Washington, are doing things like, we have interests like the tax trifecta about expensing R&D and interest and capital projects, and there's no movement on it. And I told the speaker that he's losing the window because people are saying, we face a government, even the government headed by him, or the House headed by him, who's willing to sacrifice the interest of manufacturing, onshoring, and good American jobs on the altar of you know, other causes. And the second point is, I think this is a very important point. It's hard to recruit people to manufacturing. Jobs like technical careers have a PR problem. People view them as a consolation prize. The NAM has surveys that say 90% of the people say manufacturing is important. Only 30% want their kids to be in manufacturing because they worry it's dark, dumb, and dirty. It is not. If you go back to the COVID, you'll see that, boy, when many people were sheltering in place as they should have, manufacturers and truck drivers and warehouse workers and car mechanics and truck mechanics were at their posts, keeping our society from disintegrating. They proved in that time that they are the essential workers of our time, and we were all witnesses. So what the government needs to do, what we need to do here, is build up the education to match skills, to match the skills that people are learning in schools to what's needed, actually needed, and that is those technical careers, and then talk about those jobs as though they're really important. They're more than a consolation prize.
Nick, up against the clock. Really enjoyed this conversation. Hope to continue it soon. That is Nick Pinchuk. He is the CEO of Snap-on. Now we want to get a quick check of the markets right now. Abigail Doolittle standing by.
Well, we're looking at a pretty robust rally at this point, Katie. In fact, a fifth up day in a row for both the S&P 500 and the NASDAQ. The NASDAQ leading the way, not surprisingly. Big tech up more than 1%, but the S&P 500 not so shabby and on above average volume. Right now, the S&P 500 up about 0.6%. Again, 5 up days in a row, the longest winning streak of the year, the best winning streak since the middle of December. Now, over the last 5 days, let's break it down from a sector standpoint, because really standing out is technology, up nearly 7% in 5 days. That's just incredible, especially given the fact that you have yields higher too, which theoretically should scare tech investors as liquidity potentially comes out of the system, but that's not happening. Communication services, another mega cap tech sector, today really being helped out by Netflix, up 6.1% to the downside, making it more risk on. In an interesting way, Katie, is the fact that you have the utility sector, defensive sector, down 2.5%, not doing as well because those dividends don't look as well against the backdrop of rising yields. And then you also have a small decline for staples. Now, of course, we're in this part of earnings season. Netflix kicked it off for big tech in a positive way. An interesting trend, and at some point, something's got to give here, Katie. In white, we're looking at the S&P 500. In blue, we're looking at the annual earnings estimate, and you can see earnings simply keep going down as companies are putting up some disappointing outlooks. For instance, DuPont today pre-announced to the downside for their earnings, but stocks keep climbing. At some point, that disconnect is going to likely reconnect. It'll be interesting to see how that happens for stocks and earnings.
Yeah, how those lines come back together will be, of course, very important to watch. Abigail Doolittle, thank you so much. Now, coming up, Netflix posts its best subscriber gain since the early days of the pandemic. We'll discuss with Michael Wolf, Activate CEO and co-founder. He joins us in today's Wall Street Week Daily with David Weston. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
We also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Access the financial world on demand. Hear Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Time now for our daily Wall Street Week segment. And joining us now is Activate Strategies CEO and co-founder Michael Wolf, as well as Wall Street Week host David Weston. Activate, of course, a consulting firm specializing in technology and media. And David, a timely conversation coming off of Netflix earnings.
After Netflix yesterday, I should say. Thanks so much, Kay. So it's great to have you back, Michael.
It's a pleasure. It's quite an interesting time.
Yeah, well, especially for Netflix at the moment. Yes. They did awfully well, both in subscribers and revenue, besides that WWE deal. It looks right now like they're going a different direction on streaming, a more successful direction than some of the alternatives like Disney Mild Shop, as well as Discovery, Warner Brothers. Is that what's going on?
Well, they amazed everybody by having 12% growth, not only in revenue, but almost the same in terms of subscribers. What's different, though, is they're moving more and more of their subscribers to a tier that includes ads. And they're packaged with their sort of standard package is around $15.50. Now they're down to $6.99. And what's fascinating is their average revenue per subscriber is going up while they sell ads. And then they're doing a number of other things. They're actually increasing the amount they're spending on streaming, and they have shows like Night Agent and Queen Charlotte. They are adding games. They're adding sports. They just completed their WWE deal for Raw that begins next year at the January 2025. So they're 40% of their new subscribers are coming from that ad-supported tier, and others are going to follow.
Well, they're also cracking down on password sharing. Of course, you think about the narrative around the 13.1 million subscribers that they added in the latest data, and it seems like most of that came from password sharing. Is that a playbook that some of these other big streamers are going to follow?
Yeah, we don't know whether it came from limiting password sharing. A lot of it's coming because they're lowering the price through these ad-supported tiers, and as they acquire a new customer. So 40% of their customers have come from this new ad-supported sort of hybrid tier.
Michael, are we going to replicate basically in streaming what we saw in cable? I mean, when you start saying we're going to have advertising supported, that sounds to feel like basic cable used to be. Is it the same thing except I can get out of it a lot faster?
Well, we're going to, if you think about what basic cable did, is you bought a bundle, whether you watched it or not, and it's of course what drove the success of ESPN and other networks. We're about to see a great rebundling of these streaming services. So right now, Max and Netflix are getting bundled together by Verizon. Verizon has launched a new service called Plus Play. It's $10 a month for those two. And I think right now we're seeing in-company bundles. So Paramount has both Paramount Plus and Showtime. Disney is offering Hulu and Disney Plus, and then also ESPN Plus in that same package. So we are going to see that, but it's going to be a number of years away before we see the kind of profitability we saw in cable.
Well, coming back to the viewer, I can understand why these streamers would want to bundle and rebundle, et cetera. How much exhaustion is there among the audience, though?
Well, as long as they keep putting on new shows and bringing back older shows. So if you look at Netflix has the new shows I just mentioned, but they're bringing back shows like Suits and others like that. So people are looking at both, and they're not exhausted. So more today, the majority of what the world has shifted, and more television or more video is consumed on streaming services than on television.
Michael, how much of it is the old stuff and how much is the new stuff? I mean, you remember when Bob Iger bought the Fox libraries, thought he really had an advantage because he had such a library, and I think they still do have a remarkable library. Does that give an advantage anymore? Because they seem to be struggling a little bit right now at Disney.
It originally, when all these services launched, it was the library that brought people there, and the originals kept them. It's now flipped the other way. They have to keep producing originals. Of course, people want to go back and see some of the older shows, but it's the originals that are driving people. And as much as each of these companies, apart from Netflix, says they're going to cut back on their spending on programming, they don't have a choice. Compared to Netflix and Amazon Prime, they need all of those new shows in order to not only get you there, but also to keep you there.
I want to talk a little bit more about live sports. Of course, we had the Netflix WWE deal yesterday. A lot of people taken by surprise, especially by the price tag. You think about the live sports audience and people who are watching traditional TV, and you think about the hysteria over the Dolphins-Chief game earlier this month that was on Peacock. My dad was texting me frustrated with actually logging on. How messy is the process of putting live sports onto streaming actually going to be?
Well, first of all, you've got to expect that each of the streaming services is going to have live sports in one way or the other. And it's the real messiness is going to be from the perspective of the consumer, because how are they going to know where to find everything? And so I think that's it. And of course, some of these technical details and others will get ironed out. The bigger issue is I, as a sports fan, aren't going to necessarily know where to go, and the sportscasters are going to be different. We're moving into a world where sports is going to be very fragmented.
Can Disney, can Paramount copy from Netflix to get their success?
I think that each of them is going to go a different way. I think in the case of Disney, they're going to become, they already highly reliant on established brands and programming. So if you look at their upcoming, first of all, Wish and Marvels didn't do well at the box office. There are a lot of people who think we're getting to the end of the Marvel franchises. I don't believe so. But each of them are going to, what they're going to copy is they're already going to add supported tiers, and they are going to continue to produce programming. I don't care what they say, they don't have a choice.
Michael, I have to say I've never seen a Marvel movie. I don't think I ever will. It's just never grabbed me. Let's switch gears pretty dramatically here, because I want to talk about the metaverse. I was looking through your notes. You wrote that there are over 300 million active users in major virtual world platforms. That number shocked me. Can we actually define what the metaverse is? Where are those 300 million people?
Well, there are these immersive worlds like Roblox or Minecraft or Fortnite, and some of these people are spending enormous amounts of their lives. The difference between those being games and versus metaverse is that people, they can build themselves inside of these games. They have social interactions. You can go there and not play the game, but you can hang out with your friends, or you can meet new people. There's real economies inside of those games. So as much as metaverse was very hot last year, people talked about it. Now people have said AI is killing the metaverse. It's actually the opposite. AI makes it much easier for you to have a place in the metaverse, for you to create an avatar that's photorealistic, for you to find your friends. So it may not be that on the tip of everyone's tongues today, and actually the hype cycle is pretty much over. But when you look at any of the technology hype cycles, it's usually at the bottom where real investment continues.
Just for a moment here at the end, we tend to think about it in terms of gaming, at least some of us of a certain age. What about more concrete applications in the business community?
Well, I mean, I think we're going to see, when we talk about spatial computing, the Apple headset and others, we're going to see that's going to have real enterprise applications. So, for example, the HoloLens from Microsoft, that's something more, you put it on and you're there to repair an aircraft engine, not just to have fun, or you're there looking inside of a machine. So we're going to see more and more of that. And there are industrial metaverses. There are worlds where people are going to use that in order to practice operating on a patient or repairing a car.
All right, Michael, so enjoyed this conversation. Hope to see you again soon. That is Michael Wolf, CEO and co-founder of Activate Strategies, and of course, our own David Weston. This is Bloomberg.
Did art conservation help you in any way to be a better investor? And should a lot of good investors who learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of pre-work before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. Lots of testing, lots of thinking about what could go wrong, lots of research. When I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of, like a mosaic theory, put all these things together. I feel like I do that in my due diligence. Let's take a look at some of the stocks hitting 52-week highs today. And we start with Microsoft. Of course, it's also seeing its valuation hit a historic $3 trillion, briefly surpassing Apple. Of course, that's an AI story. Meta as well, also hitting a 52-week high, propelling its market value to $1 trillion for the first time since 2021. Ally Financial there as well. It beat fourth quarter earnings estimates and announced point-of-sale financing business. It's going to sell that to Synchrony. And finally, we have Scottish-based asset manager Aberdeen hitting a 52-week high after announcing plans to cut 500 roles, or about 10% of its workforce. A little bit of a bummer there, but shareholders like it. Now coming up, we have CrowdStrike President Michael Sentonas joining Bloomberg Technology with Caroline High and Ed Ledlow next. This is Bloomberg.
Regional sports networks. It's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen.
because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Back together again. Coming up, Ed, full earnings coverage. Of course, Netflix, it soars after posting its biggest subscriber growth since the pandemic. Details ahead.
Plus, sticking with earnings, we'll break down the results from Europe's most valuable tech company and hear from the ASML CEO himself.
And we push ahead to the results out after the bell and partake in a bit of a game of bingo. But this time, you'll have to listen into the Tesla earnings call to win. All that and so much more ahead. Meanwhile, let's check in on these earnings and these markets because, look, we are seeing reprieve money pouring into the US stock market on the back of technology managing to outperform in terms of earnings. Yes, we'll dig into Netflix in a moment. NASDAQ up more than 1.1% on the back of it. Now, interesting, we're all thinking about China, about whether or not stimulus is indeed to come. They signal that they will reduce those rates that are held by the banks. Reserve requirements are going to come down in the next couple of weeks. We see the stock market reaction. I'm highlighting what's happening on the NASDAQ Golden Dragon. At the moment, we're up 2.6% for the Chinese stocks. Now, we're seeing bond market pretty lackluster on the day as we see some pretty strong data here in the United States. Move on and see what's happening in the world of Bitcoin, though, because what a torrid ride we've had of late. Yes, we seem to have traveled and arrived and now sell off, but today we're actually up again 2%. We're at 40,000, holding at that sort of level at the moment, Ed. But let's dig into the micro. What's happening on your end?
Yeah, a lot going on in single names, specifically in the earnings context. Texas Instruments is the biggest maker of analog chips. It gave